Hello, everybody. I'm your host, Eric Bird, here at StopStrugglingNow.com. And tonight, we're getting into it. Business ideas with low investment 2022 happening now. That's right. We're going to talk about it. And feds are coming with the pain, ladies and gentlemen. So like I've been saying, it's not going to stop. And that's why 2022 is passive income. 2023, buy house. That's right. There's set criteria here. It's already being set up for you. What more can you ask for? And welcome to the SSN Nation Wednesday Night live stream, where it's members only that can be in the chat room. Everybody else, hello there. You can watch, but only members with the icon next to their name can be in the chat room tonight. So if you're not able to be in the chat room, now you know why. And welcome. Stop Struggling Now gear. Check. And please like, subscribe, and click the bell below so you get the latest updates. Now, let's get to it. All right, welcome back, ladies and gentlemen, and thank you so much for being here on the Wednesday night live stream, otherwise known as the SSN Nation Wednesday night live stream, where it's members only with the icon that can be in the chat room. Everybody else, please share the videos. That's so the YouTube gods know that we're here, making things happen, giving out information that can help people, real information, no courses, no ebooks, no webinars, no seminars, no barriers to entry. Nobody's coming to save you, though. So you're going to have to do it yourself, ladies and gentlemen. Now, please, it's free. Smash the like button. That's so the YouTube gods also know that someone's in the house. And over the course of this live stream, if you're watching and you like what we're talking about and you're not a member, well, please subscribe to the channel. Click the all notification bell. That would be very helpful as well. Now, let's see. There's a few in the house already tonight. We have Laverne Penix is here. Welcome to the SSN Nation Wednesday night live stream, where members only with the icon like he has next to his name is in the house. Laverne Penix, otherwise known as Mr. Cool here in the SSN Nation. And he brings a tagline, ladies and gentlemen. Hello, SSN Nation. I hope everyone is doing well. Let's make some money. That's the name of the game right now. We need those extra streams of income. So we're going to go through a plethora of ways to make some money tonight. You guys know in the SSN Nation, we have a set program now because SSN Lifestyle is going to try and help people make money. But that doesn't mean that's the only way we're going to be making money, because there's referral marketing, social media marketing, starting your own business. It's a myriad of things, investing in real estate, multifamily, single family. It doesn't matter, and it won't stop, ladies and gentlemen, because we're not a one-trick pony. And that's why sometimes we have to talk about stock market investing, crypto investing. It just doesn't stop there, does it? Well, we're going to get into it a little bit more tonight. But Mr. Cool's in the house. Has the icon. He's received a notification and trailer. That is awesome. That's one person. So everybody who comes in tonight, let me know if you received the YouTube trailer and or saw or received the notification and or saw the trailer. Victor Marrero's in the house. Welcome to the SSN Nation Wednesday night live stream with the members only icon next to his name. And he says his one of two taglines. Hello, all. Let's do this. That's right. Just came back from the Eurozone, having the fun of his life. And how awesome is it? You guys know I have nothing but love for Europe. You know that. Victor Marrero just came back. He's feeling nothing but love either. He said, hold on, I got to go find me something over here in Spain now. All right. I can't blame him. Auntie Val is in the house. Welcome to the SSN Nation Wednesday Night live stream, where it's members only that can be in the chat room. And she's here. And she has the icon. And she brings her trademark trade line. Good evening, fam. With the heart, with the strength and the support. And she got the notification and trailer. Thank you so much for letting me know. Oh my, this is a record, notification and trailer. I don't even believe we've ever had 3 people that have said notification and trailer in a row. Well, look at what happened today, ladies and gentlemen. And by the way, Auntie Val is AKA Professor Auntie Val, because she gave us the #1 investment opportunity of 2021, ladies and gentlemen. And there's something very important. When you invest, sometimes it's good, better, or best to actually keep some of the profits. That is a good thing sometimes. When you're rolling out here, keep some of the profits. You start a business, you're making money, hold back some profits in reserve. No matter how you do it, hold back profits in reserve. And how can you do that? Well, you can make other investments that's liquid, like the stock market, for instance. Crypto, okay. Gold, silver, precious metals, if you have somebody that can flip it to liquid real fast, okay. But all I'm saying is keep a little bit of profits, or take some profits out when things are going great. Victor Marrero says he just got the notification and trailer. And so that's why Professor Auntie Val has this title. Now, let's get into this, ladies and gentlemen, because today, business ideas with low investment, 2022. In fact, I don't even know where to start, because what's a low investment? Zero is a low investment. And everybody here tonight already knows about earn free Bitcoin. There may be somebody watching who doesn't. So you can try Crypto Tab. And in fact, the link is down below in the description. Earn free Bitcoin, and it uses your browser. And so as long as you have a computer, a tablet, a laptop, a desktop, or a cell phone, you could be mining crypto as we speak, as you're on vacation, as you're at work, as long as your computer software is working. You're good. It's parts of a penny a day, yes. But what do you expect? It's Bitcoin. Bitcoin's going down. It's under 20,000 once again. The predictions are in. It's already reached the 17,000 that I thought it would go to anyhow. But Professor Auntie Val saying, hey, Eric, it might go down to 10 or 9. Now, there's other people starting to say this as well. More people are saying, oh, it's going to go down to 10 or 11 or 9 or 8. And somebody even said, what if it goes down to 5? I was like, oh, my goodness. That would be very bad. But all I'm saying is, to start this off, business ideas with low investment 2022, earn free Bitcoin with Crypto Tab. It's down below in the description. In fact, hold on. This might be a little more video night. Let me see if I have the video. I'll load it up. I'll play it for you. Their little promotional video. Let me see if I have it. Yes, I do. All right. Well, here we go. For all the new people, check this out. Here we go.
Are you interested in high passive income? Do you want to be in trend and earn cryptocurrency? If so, try Crypto Tab Browser, the world's first browser with an integrated mining algorithm that allows you to earn Bitcoins simply by using your browser. It has a familiar interface and all the necessary features, plus mining running in the background. Invite your friends and family to use Crypto Tab Browser and multiply your earnings using the referral system. Discover Cloud Boost feature and start mining at lightning fast speed, quickly increasing your profits. Grow a large mining network and get a stable income. Share your personal link with other people and get a percentage of their mining, their friends' mining, and so on, up to the 10th level. There are plenty of benefits for our affiliate program members. Install Crypto Tab Browser on your computer and start earning right now. Get stable income and guaranteed payments in Bitcoins every day. Download our app to make your profit on the go. Join us.
All right, ladies and gentlemen, that just gives you an idea of what's going on, but you don't have to put up any money. So that's why when we say business ideas with low investment, that's big zero. All right. How about another one you guys already know here? I know the guys with the icons already know Airbnb experiences, something you already do. Search the channel if you want to find out a little bit more about that. I do have a video about it. But basically, whatever you love to do, you just put it on their platform and invite other people, meaning you put it on their platform as a host. And then you say, hey, do you like going fishing? Do you like going biking? Or do you like walking around the city? Do you like going to a certain type of musical event? I'll take you there to this special bar every Wednesday night, maybe, or comedy show every Wednesday night. And you can put that up there because people come from out of town on Airbnb experiences. That's also zero to invest in. I didn't put zero investment. I put low investment. But what's a low investment? It's all relative to how much you make. So I want to get into something else, though. Speaking of low investment, this right here, again, you guys know the PPP loan, when it came out, I refused to talk about it because people were going to get in trouble with it. And sure enough, the Federal DOJ is out here rounding people up because they signed on the dotted line saying certain things they misrepresent, and under penalty of law, you can be arrested. Well, they are handling biz. So again, you knew it was a setup unless you had a bona fide company and unless you had people out here that you were paying as an employee, bona fide, taxes and all. So without that, which let's just face it, there's not that many people that are doing that. So therefore, I wasn't going to go down that path. But anyhow, I just want to bring this up because I'm going to show you this right here. Another path to get people in trouble. Here we are again. Check this out, ladies and gentlemen. Can you believe this? Okay, this has to do with investment, so please stay tuned. Everybody knows where I'm going after you see this, because this right here is disgusting. Bank of America new home loan program lets borrowers buy homes in select cities with 0% down and no closing costs. What's even worse? Here's what's even worse, America. This new loan will make home ownership more attainable for borrowers living in minority communities. What kind of nonsense is this? Let's get things straight. If you're going to put down 0%, you're not going to have any closing costs, then what does that mean? That means they're going to have to make up their money from somewhere else. So what they're going to do is you're going to sit there and a lot of people are going to go, oh, I don't have to put down no money on a $400,000 house. Then they're going to tell me I have a 7% loan, maybe even higher. That's $2,800 per month. That's might as well just round up to $3,000 after you add insurance, and never mind real estate tax. So you're going to be probably over $3,000 before you even wake up in the morning. That means you have to make 3 times that amount generally. So you got to make 10 G's with no debt anywhere else. Most people don't have 0 debt. So whatever other debt you have, you're going to have to make 3 times that amount in overall income that you can show per month. So you're already at $120,000 a year if you go by the average median price of a home, which is actually $480. But I went down to $400. So what type of homes are these people supposed to buy at 0%? And look who their target market is. Are you serious? In minority communities. What are minority communities generally associated with? It generally associates with, if the average median home price is $480, generally the median price is probably going to be $300. So all I'm trying to say is, if the person can't afford to put down 5% or 10%, we know what's going to happen. There's going to be defaults. This is 2007, 2008 all over again, on the backs of so-called helping people out. I'm not buying it, ladies and gentlemen. This is going to exasperate the situation another year from now when people get into loans and then realize, oh my, this isn't just costing me $1,500, $2,000 a month. This is costing me $3,000 a month, $2,500 a month. And then when things break down, it's costing me more money. So the reason you put down payments normally is you're kind of vetting a person. But of course, they need to sell homes. So what do? You do this right here. So be very, very careful, ladies and gentlemen, because that is a low investment for sure. But again, they are, in my opinion, setting people up. Oh, in fact, look at here. Look at this. I didn't even realize this. 5%. Look at this. When you consider 5% down lender fees, which can run up to 1% of home's value and closing costs, 6% of loans, buyers can pay close to $46,000 up front for a $400,000 home. This still excludes charges like underwriting fee, title check, home inspection pay. Okay, I get what they're saying. But anybody, if you think that if you were a bank, would you offer 0% down? That's all I'm saying. You would not. You'd be like, hell no. I'm not. You got to throw something down because now you can just walk away. You can trash my joint and leave. No vested interest. I'm just saying from a business standpoint. So all I'm saying is, you know what's going to happen down the road. 2007, 2006. This is what they did for everybody. And again, I think it'll be for everybody. I just did the minority twist, but it's going to be for more than minority communities. But I'm just saying, if you are in a minority community and they're offering you these zero downs, all I'm saying is just be very, very careful because they want you to be in a house that next year, this time, may be 50% lower, maybe 40% lower. And now you're going to be heavily pissed if you bought a house for 400 grand and you wake up next year and it's worth 220 or 250, but yet you're paying on 400,000. So all I'm saying is don't get caught with this nonsense. In fact, the motto here that I have, do not buy a house until it drops 40% minimum. And even then, think about it, because I'm thinking it's going to be worse than the Great Depression, 2008, 2009. All right, or 2010, whatever you want to call the Great Depression, because somebody was in here acting like they knew something about housing. So anyhow, I just want to point this out. Be very, very careful. This is a warning, ladies and gentlemen. I don't want to hear you next year saying, oh, I got that zero down loan, man. The house was $375,000. Now that house is worth $200,000. And I got to still pay on it. What can I do? You can't do anything. You signed a contract. The only thing you can do is call them up and say, hey, man, my house is only worth $225,000 right now. Can I get something done? They're most likely going to say, hell no, we already sold that note. We got a derivative off of this. We sold like millions of these things. That's worth billions of dollars to us. So you got to talk to whoever took over the new loan. And the person that took over the new loan, they're not going to want to let you out, because they paid the equivalent of $400,000 or $375,000 for that piece of paper. You think they want to sit there and let you out at $200,000, $220,000 and say, well, we negotiate? Rarely done, ladies and gentlemen. So don't get caught up in here because it's 0% down and you can buy a house. Do not do it. All right? This is not the time. The feds are going to increase the interest rates. All right? Just keep that in mind. All right? So I want to give you a warning, like we do around here. This is stop struggling now. This is how they keep you struggling, because they know your mortgage payment's going to be higher than normal because you didn't put any money down. They know that the house is going to go down in value. So now they're going to stick you with the house that's going to be worth less in a year. And then you're going to be like, damn, what should I do? And then you're going to probably say, well, F it, I'm going to walk away. Then your credit's messed up. So that's the ball game right there. So don't go down this path, ladies and gentlemen. It's better to stack your money now and wait and see where the cards drop later. It looks like we have someone else in the house. It looks like drip, Animal Farm cryptocurrency is back in the house. He has the icon next to his name. Thank you so much for being here in the SSN Nation Money Making Monday live stream. Oh, it's not Money Making Monday, even though I'm talking about it. Wednesday night live stream where it's members only that can be in the chat room with the icon. And he says, Drip Animal Farm cryptocurrency, welcome to YouTube. He's now a member once again. I want to thank you so much for that. I appreciate it. And he says, excellent content. Thank you so much, Drip Animal Farm cryptocurrency. I don't know where you have been, but I have not received any notifications for your YouTube channel. So I don't know if you're still uploading or if they've blocked you out from my feed. Apparently they may have, which has happened a lot. So anyhow, ladies and gentlemen, I know he used to have a YouTube channel, so go check him out. He talks about different things. He was even at a casino is the last one that I remember. So he talks about, and as you can see, Drip Animal Farm, he's repping Drip Network. Wilson Koo's in the house. Welcome to the SSN Nation Wednesday night live stream where there's members only that can be in the chat room, and he's here with the icon, and he sells money, ladies and gentlemen. So here we go. He brings his tagline. Good evening, Mr. Bird and SSN family. 100% facts. I sell money. That's right. In case you don't know what that means, it means exactly what Bank of America is trying to do. Sell loans to you, sell money to you. But again, do not get those right now. Now, if they're offering this after things go down 30, 40%, then by all means, jump on it. But there's no reason to overpay for something because you can put zero down. All right? That's ridiculous because you want to be in the upside. I'll repeat, if the house goes down from 400 down to 250, you want to be in that 250, 260, 240, 230 range, because if the house goes back up to 400,000, guess what? You have over nearly $200,000 in equity. You can do something with equity. You can't do something when you're underwater and no equity. All right. You can expand your assets and your wealth during that time. It's a lot easier. Now, I might as well put this out here too, since I talked about the equity. Don't go out here and then say, hey, I'm going to take out some of this money, refi, get some equity out, and then go around here and buy liabilities. You're only going to take the money out to buy assets. Other assets that pay you. Assets pay you. A house does not pay you when you live in it. You pay for the house. That's not an asset. They call it an asset because if it goes up in value, then it turns into an asset, pseudo asset. But that's why you need to take money out, put it into another property or multifamily, rent those properties out, and the money you make from that pays for your house note. The playbook for 2023. I'm giving it to you once again. I've talked about this before. Check out the video. But let's get back to Wilson Koo because he sells money, and that means you can get loans, ladies and gentlemen, non-traditional loans, but not this 0% down, even though he may be able to get you that. But I'm advising, do not do that right now. All right. So he can get you loans for startup a business, for land, for if you have a project. This is the man to see. And if you need a loan and you have an idea or you found a property and you're sitting there going, oh my God, I can't finance it. No, you can. You just don't know any way to finance it because what do you think all these top 10%ers are doing? Do you think they operate such as this? Oh, I see that multifamily home over there for $400,000, but damn, it needs rehab for $300,000. What do you think they do? They use other people's money. They're going to go to the bank and try to talk them into, hey man, after I buy this for $400,000 and after I put in $300,000, that's $700,000, but it's going to be worth $1.2 million after I do all that. Can I get a loan, please? And they generally go to the top 10%er. Sure, no problem. But to you or me, they're going to go, hold on now. Where's your down payment? Where's your letter of intent? Where's your bank statements or something, right? Where's this money coming from? Because we're not in the top 10%. So you need somebody like Wilson Koo to help you navigate just as if you're a top 10er. All right. So therefore, go see him at quickeasyfunds.com. That's QUIK, E as in Eric, Z as in zebra, funds.com for everybody on podcast. QUIK, E as in Eric, Z as in Zebra, funds.com, or send me an email at support@stopstrugglingnow and say, hey, Eric, I'm trying to get in touch with Wilson Koo. And then I will forward your information to him to reach you. How simple is that, ladies and gentlemen? All right. Now, let's get down. Evening at Victor M, Auntie V, Laverne P, Drip Animal, showing nothing but love around here. All right. Look here. The Rock is in the house. Welcome to the SSN Nation Wednesday Night live stream. And I'm glad to see you. We're doing fine, The Rock. Welcome. Victor Morrell, good evening, Wilson. Nothing but love. I love it. Koo, man, from Auntie Val. Welcome, Mr. Koo. I hope you're doing well. Exactly. Showing nothing but love. So anyhow, let's keep it moving, ladies and gentlemen. I know you're talking about business ideas with low investment. All right, let's go another round. We'll start with this because this is low-hanging fruit. Everybody knew about Crypto Tab. I'm going to go with my Easy Tron bot. How about that? That's crypto in case you're here and you want to do crypto. Crypto's an option. You have BTC, you have LTC, which is Litecoin, you have TRX, Tron, you have USDT as crypto holdings. You have $10 or more. Well, those $10 or more can earn up to 1.5% a day, up to 1.5% with my EasyTron bot. You can search the channel. I made a video, missed 27 streams of income. Melanie Bonita is on the live stream with us, helping us go step by step to sign up. So down below in the description, please pay attention. There's a link down there. But step 1, go get your Telegram app. Step 2, watch the video. But it is kind of self-explanatory now. When you sign up and go with the Telegram and it asks for your legal name, you can either put your legal name or you can use a username. All right. But you better write it down. You don't want to forget that. All right. And then the steps are pretty much self-explanatory after that. And then after you get down to the bottom and finish everything up, there'll be a box and they'll say deposit. And then it'll tell you what your code is, your address for crypto to send the money to the MyEasyTron bot application. All right, it's that simple. But again, you can find out a lot more on the video. Step 2 is down below as well for a link to the video. So how do you like that, ladies and gentlemen? All right, here we go. Victor Marrero, he's talking about the stock market today. Yes, 7-day slide, 1 day up. Just what we talked about. This is 1929 all over again. So we're going to have another day at the pump up, maybe tomorrow, because let's face it, ladies and gentlemen, I believe the Wall Street gang, they finally told the Federal Reserve, they said, we can live with the 0.75 rate hike. But I ask you this, ladies and gentlemen, why is it that they could live with a 0.5 rate hike 6 months ago? Why could they live with a 0.75 rate hike 4 months ago? And then why could they live with another 0.5 rate hike 2 months ago? It seems to me that they could have lived with a 2% rate hike 6 months ago. Doesn't it? What's the delay? See, that's the curious question, except I don't believe in coincidences. When it comes to money, because simply they're setting up their top 10%er buddies for that soft landing for them, because they want people to put money back into the stock market to help their buddies out. Because hell, we can't keep bailing out our buddies and giving them money so they can buy back their own shares of stock now that they got to pay 1%. When they do that now, so I got to give the Federal Reserve 2% damn near, and now I got to that's 3% on our money now. I don't want to do that. So we need the stock market to go up a few days every now and then so people can throw some money in there, please. All I'm saying is that's what's going to happen. That doesn't help us, ladies and gentlemen, when they're doing that, all right? So now, it was a nice pump today. But that's all it's going to be, ladies and gentlemen. I agree, Victor. Professor Auntie Val says I agree. Yes, there was 400 points on the Dow. That's incredible after a 7-day slide. But again, why is it going up? I don't get it. All right. Hey, boss. Vanessa, Gates in the house. Welcome to the SSN Nation Wednesday Night live stream, where it's members only that can be in the chat room with the icon like Vanessa Gate, and she brings her line tonight. Hey, boss and SSN fam. She received a notification. That's 5 people, ladies and gentlemen. And then what's good, sis? Showing the love in the house from Professor Auntie Val, Vanessa Gate. Busy as usual. Yes, she is. She's building an empire. The genius with fingernails to go countertop unit. And she created out of thin air a way to make money. That's right. Nearly thin air, because you actually did have to get the mall location all set up and have to pay for that up front, I'm assuming. So therefore, there's a little investment, a low investment of maybe $4,000. Is that a low investment? For some it is, for others it's not. All right, so that's how starting a business for roughly $4,000, ladies and gentlemen, that can return 3 times that per month or more. Sky's the limit. That's right. How about that? Unfortunately, we may or may not talk about that tonight. I think we might. So you're going to have to stay tuned for that, ladies and gentlemen, because up next, I want to talk about something else first, because we're going to move along, because Victor Marrero, he brought up the fact about the markets. So I'm going to have to talk about the markets a little bit, right? We're going to have to go look at the markets, because there is something that did occur. Tesla was back up to around 280. So that was pretty good. So the question was, when do you buy Tesla after it dropped from 297? Okay, 280 still good. 270 was good. 267 was good. You're in the ballpark. Is now the time to buy because we had that upside? That's the $1 million question. Let me know what you think. I thought I had something for the market, but I actually didn't, because it was green. But I want to show this. This is what I was talking about earlier. Market bracing for another 3/4 point hike from the Fed this month. Okay, I don't know about you, but bracing is hardly the word. This is September 7th from CNBC. That's hardly the word I would call bracing when you have a upside on the stock market. That doesn't look like bracing to me. That looks like they're happy that it's only 3/4, 0.75, which now means, ladies and gentlemen, you're in the 6% for a loan, even if you have a 760 credit score. You might be around a 7% score if you have a 720 or less. I don't know, but maybe Wilson Cool let us know what the situation is going on, because I'm pretty sure there's going to be some people paying 6, 7, 8%. And guess who those might be? Those zero down people. You might not be paying 6.5%. You might be paying near 8% after this happens in the next about 2 weeks. It's going to be a wrap. But I just wanted to let you guys know this is why home prices have to keep coming down. And I want to see 0.75. I want to see it. In fact, I want to see it this month. And I want to see it, hell, if it was every month for the rest of the year, that'd be awesome. But they probably won't do that. So again, we're going to be on target for that 1.5. So if they're going to do this now, that means it's going to be 1.5 or 0.75 at the end of the year for sure. So that means interest rates are going to be up potentially into the 7s, because we're at about 5.6, 5.7 with the best credit right now. And some of you are going, Eric, I just bought a house. It is not 5.6. Yeah, well, you know, your credit score probably wasn't 760 or up. But the point is, again, it's going to be into the 6s. It's going to be 7% at the end of this year. You want to buy a $400,000 house at 7%? Just what I illustrated earlier. That's $2,800 just in loan. Never mind taxes for your property. Never mind annual insurance rate. Never mind water, sewer, and garbage, which is not in a real equation, but I always throw that in there. So you're going to be well over $3,000 per month just for unlocking the door. So that means you have to make $10,000 minimum to get in, pretty much. $120 a year. We know how many people make $120 a year, and it's not as many homes that are going to be available for sale. So just keep that in mind. All right. So just wanted to point that out before we get into any more stock talk. But seeing how, let's go see what pre-markets show. How many people going to bet it's green? I'll be willing to bet you it's going to be green, right? For tomorrow, pre-markets, let's see. Because, they're bracing. They're bracing for that 0.75. Like, they're not scared. They're just like, why we care? Doesn't affect us. We still get to borrow at 2.75 or 2%. That has nothing to do with us. Woohoo, we can still borrow money on the cheap because we're charging you, the customers, a lot more. All right. So look at this. Green all over the place, except for the Russell Mini. But that's no big deal. Everything else, NASDAQ Mini, green, 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 green. So what do you think is going to happen tomorrow? Green. So that'll be 2 days in a row trying to entice you to get your money, ladies and gentlemen. Well, all I'm going to say again, low investment, right? Business ideas with low investment. Fed's coming with the pain. I already illustrated the pain, but what else can we talk about here, right? Well, again, my favorites right now, one of my favorites, even though it is kind of real estate sensitive, they're at 12% dividends, ladies and gentlemen. You want to earn 12% a year from a AGNC? Let me know. There's 12%. Where else are you going to earn 12%? I know. Inflation is higher than 12%. Although if you believe the government, you'd be doing good if you believe inflation is 9% or 8%. But nonetheless, AGNC, that's the one I've been telling people about. Now, let's go look at my old one that I loved, but it's probably around 9%. Let's see. 9.68% dividends here. So here we are once again. Those are the favorites so far. And also, I want to go say this because there's something that I normally would not say, but I like this JP Morgan situation because let's just call it what it is. These guys are a federal bank. All right. They have advantages unlike other banks. All right. Let's just keep that in mind. These guys give dividends on here, even though it doesn't say there's dividends. Just keep that in mind. Here's the other thing. 52-week low was $52.54. 52-week high is 63. So they have this small window. So again, JP Morgan, nothing will ever happen to them. And they have an ETF. So just keep that in mind. I like this. And I'm not invested in it myself, but $5 a year, I believe, is the dividend price. And that's pretty damn good. So I'm just saying. So that's something to consider as well. That's a low investment. You can put in whatever. You can buy fractional shares, even if you didn't have the $55 or $60. Down below in the description, get your free stocks from Robinhood and Webull. All right. Then you can buy fractional shares. If you want to put in $10 or $20 or $50, you can do it. If you want to put in 1,000, 5,000, no problems. All right. So just keep that in mind. Okay, here we go. Auntie Val, biz as usual. Have you guys heard of the BOA mortgage loan deal? Vanessa Comagate, I beat you to it earlier today. Yes, I was explaining that. Again, zero down. Minority communities is what they said, but obviously other people will be involved. But again, I was cautioning not to do it because let's just put it this way. I'm going to put it in these terms. They're looking for someone, you, us, to bail them out. That's what is going on here. Who's going to buy a house right now knowing the interest rates are going up? That's the first thing. So already home prices have started coming down. And I'm going to get into some other reasons that they're trying to do this. Because how else can you keep up momentum in order for people to buy? This is almost the same as when the Federal Reserve gives corporations money and they were able to borrow at damn near 0% at 0.5%. And then they would turn around and go buy stocks or go buy homes. So they had to have enough homes being bought or enough stocks being bought to keep the stock market afloat and the home market afloat. Same thing they're doing here, except instead of doing it the other way where they're printing up more money, they said, aha, we'll just do zero down because it's really about the paper, the derivative. We don't, and we get to sell the homes and we get to keep up this little facade of home prices staying at a certain level. Of course, because you just allowed people to buy a home for 0% down. So of course you just put in who knows how many millions of people that might take the bait. But eventually, when you raise the interest rates again because of inflation, their home price is going to drop. And they're not going to be too happy having a $400,000, $500,000 note, and their house is only worth $250,000, $300,000. Now all of a sudden they're going to take a calculated risk. Am I going to pay it or not? Oh wait, hold on. I didn't put anything down. I'll walk. I paid $3,000 a month, $2,500 a month, $2,000 a month. No biggie. So all I'm saying. Be careful out here, ladies and gentlemen. I call this a trap because they need housing prices to stay up. How do you do that? You incentivize. You do what they did in 2006. Everybody gets a house as long as you can breathe. That's what you do. So all I'm saying, be careful. Got the notification, says Wilson Koo. Thank you so much. That's 6 people. Thank you, thank you, thank you. Wilson Koo says evening at Vanessa K. Hey, Koo man from Vanessa. Victor Barrero says 7% interest rate for anything over $250K is insanity. You have to bring the duffel bag of cash for down payment. Exactly. Exactly. It starts getting up there, ladies and gentlemen. Sure, you might go, okay, Eric, I'll take that. Yeah, you're going to take that. That's $1,800 a month. So you're paying $2,000 a month. So you're going to have to make $6,000 per month. $72,000 a year household, which is doable. And quite frankly, that's going to be an insanity. Here's the thing. You guys know we have a playbook for when you buy a home. If we're going to spend $250 on a house and have a 7 or 8 or 9% interest rate, that means the house has dropped 40, 50, 60%. That's the only way. This house, this $250K better be a house you bought when it was $550,000 or $600,000. Now it dropped to $250,000. So now it makes sense to pay a higher interest rate because the Fed are going to reduce their interest rates eventually. Let's call it a year and a half from now. And then there'll be a buying spree once again with regard to real estate. And then they're going to down below 4% again. And then it's going to be just what we had before because they're going to have their federal funds rate where they can loan to banks and everybody else 0.5 or 1%. That's what's going to happen again. This is a playbook every 10 years. Don't worry about it. Just play along. No reason to catch a falling knife. And Victor Marrero is right until it falls down. So this, if we're talking about in today's terms, $250,000 is a home in your area. That home, when it gets to 125 and you have to pay 9%, you're only going to be paying $950 for 50% drop in price versus right now, 7% is $1,800 as a mortgage plus other fees. So would you rather pay $1,800 at 7%, or would you rather pay at 9% at 125, 950? Come on. Numbers don't lie, ladies and gentlemen. That's why you shouldn't get caught up with the buy something now routine, because you're going to be paying, in fact, it is insane, actually. $250,000 house is going to cost you $2,000 a month. That's pretty interesting. All right. So just keep that in mind. Okay. Facts. It's the okie doke. Exactly, Vanessa Comagate. Trying to play people. Once again, JP Morgan is a powerhouse. You have to admit, when our CEO speaks, the market listens. Exactly. You need to have JEPI in your portfolio. Provides appreciation and above average dividends. Exactly. Above average dividends is exactly right. And they're on the pulse of the Federal Reserve. See, I call JP Morgan. In fact, for all we know, the name is JP Morgan. For all we know, they are part of the Federal Reserve banking system. They are the Federal Reserve as far as I'm concerned. Like I said, I call them the Feds. So they actually make investments based on insider information. So that's why you have to love it. And that's why actually I've never invested in JEPI. So I think I'm going to start investing in JEPI. I feel comfortable because these guys are like Victor Morrell just said. When Diamond comes out and starts talking, all of a sudden everybody's like, hold on, wait a minute, what's going on? Because he's almost like Powell when he comes out talking. You can glean a little bit of something going on from these guys. But all you do know is they have self-preservation in mind, and they need your money to make sure their self-preservation stays intact. Just keep that in mind. So they're not going to screw over their JEPI fund. They're not going to screw over anybody. They're just going to say, okay, we take your money and we use it and we do deals. That's all a bank does. The Federal Reserve, they just loan them money at low interest rates. So these guys can play a bigger ball game, because if I can get money loaned, other people's money, and get billions, you can make moves. In fact, you don't need billions to make moves. You need only a few $100,000. If they dropped a couple $100,000 in your lap, I think your life better be easier, because you should have been out there doing what these guys do. They're buying up property somewhere and getting a return on their investment. The same playbook. Or they're buying a business that generates money for 200 grand. Either way, they are well ahead of a startup. Unlike the majority of Americans are into startups, you have to start your business. You have to take the risk. They don't take risk. It's other people's money. Just keep that in mind, ladies and gentlemen. All right. So thanks, Victor Morrell, for mentioning that. All right. Leah Dennis is in the house. Welcome to the Wednesday night live stream, where it's members only that can be in the chat room with the icon. And she brings her tagline, good evening, SSN family. I also received my YouTube notification. That's 8 people, ladies and gentlemen. Can we break the record tonight? That would be awesome. Let's go. We need 4 more people. All right. I am not seeing rates below 8 for good credit. Oh, my. Ladies and gentlemen, do you not see this right here? I knew he had a pulse. I knew he was going to tell me something crazy. I was hoping we were going to be only at 6 point something, 6.5. Oh, this is bad. Because if this jumps up to 7, ladies and gentlemen, you don't understand. That's a ticking time bomb. Because that means you have to make $120,000 a year. That's a ticking time bomb. Soon as you get over 6.5, actually, I'm going to put this in Google. All right, I'm gonna put this in Google. They said they're using 100K metric. I don't know if they're doing worldwide or not, but just like you don't want to know this really. I'm going to show you, ladies and gentlemen. So you don't think every time I keep talking about it, they're in the top 10%. This is why I say top 10%, because this right here on the screen, 12.83%. All right. Now, look at this is what the pay scale is showing. Look at this. 130 to 135 is 10.74%. All intensive purposes, this is 10%. This is why I always say top 120, 100K, top 10. You guys, there's not that many people that make $120,000 or more. And if you have a car note of 300 or 400,000 and you want to buy a house for 400 grand, guess what? You just now have to make about $145,000 a year. And now you know definitely less than 10% of the people. 10% of the population is 35 million. Not all 35 million are going to be looking for a house. They've already bought their house. So now what happens with those homes that are up for sale in the United States, and they have 10 million homes for sale or 5 million homes for sale or 4 million homes for sale, and they're all 400 grand? Guess what? How many of those 35 million? Actually, it's not 35 million, by the way. That's a fallacy. Let me tell you why. In America, 350 million people don't work. Roughly anywhere from, normally, if this was before COVID, 150 to 180 million Americans work. So when you start talking about 10%, it's actually 15 million to 18 million have a job. It's less than that right now. It's closer to only 100 million people. So we're really talking about 10 million people make over 120,000. So when you start breaking down numbers, I'm a numbers guy, then you start realizing, well, wait a minute. If there's only really 10 million people that makes over 120 and it can afford to buy a $400,000 house and have credit cards and a car note and all that, then what happens when there's 3 million homes on the market for sale and the homes are 400 grand? You see there's going to be a problem. So home prices have to fall down to where you only have 15%. They're getting closer. You get to 100. They're saying 15%. Okay, great. But not all 15% of that amount of people that make that salary is going to be looking for a house. So you see, all of a sudden, all those homes on the market, they're going to stay on the market until you have Bank of America doing this nonsense, 0% down, and probably give somebody with the 640 credit score a house just so they can lock in today's prices, because they know you're going to default when the price goes to half. So all I'm saying is, ladies and gentlemen, don't be fooled by these guys. Wilson Koo, what are the VA loan rates? Oh, there we go. That's got to be at least 6.5, right? Not much better. Oh my God. Jeez. Not much better. You mean 7%? That would be insane. Good evening, Leah from Laverne Penix, aka Mr. Cool. Now, it's not the buy time yet. Wait for Black October. Hey, Victor, Wilson Koo, it's not going to be Black October. That's when the wrecking ball starts happening. It starts happening later this month. But the wrecking ball starts happening because people now who put their homes on the market last month, it's now 30 days, and they're like, oh, man, what's going on? They're starting to reduce their prices. And then another 30 days from now, after they increase the interest rates and they have nobody knocking on their doors, they're going to be like, damn, I got to reduce my price another 50K, 60K just to get somebody to knock on the door. And then it's going to exasperate when they do something between November and December and interest rates go up even more. But if the interest rates are already at 8% or anywhere near that, which I don't think in America they are, but if they get 8%, it's a wrap, because you can't even, that's a wrap. Straight up. Average home price was 480. It's dropped down a little bit. I think it's around 450 now or something like that, the median price. And so therefore, we're going to have a problem, a huge problem, because if they're going to jump it up 1.5%, well, Wilson Coos talking about 8% right now with good credit. That means we're going to be at 10% at the end of the year. Ladies and gentlemen, 10% means 4 G's a month. That's you start getting in nosebleed sections, because there's only a set amount of people that can afford 4 G's per month, 48,000 a year. You're going to have to be making 160, 170, 180, 200 G's a year. That's not going to happen. They don't have enough buyers for that. So you see what they're doing, right? Stalling the market. All right. George Maples in the house. Welcome to the SSN Nation Wednesday Night live stream. He has the icon, and it's been a very, very, very long time since we've seen you, and I'm happy to see you once again. He says, "What's up, SSN?" And oh, by the way, SSN Nation's in the house. Hold on, let me get this. Since George Maples here, let me put on the official SSN Nation hat. Welcome back, George Maple. Very nice to see you. Hope everything's been going well for you this year. And health is going good too. All right, ladies and gentlemen. Now, notice some of the gear is here. I should have mentioned this 56 minutes in. After smashing the like button, please check out the gear. That's right. This is SSN Nation gear. We have it at StopStrugglingNow.com. All right, emerging millionaires. I always get them backwards. Nobody's coming to save you. All right, hoodies. Also, it's going to start getting chilly. I don't know when, but it's going to start getting chilly maybe in a month. So hoodies are available as well. CEO of my life, emerging millionaires. Get those at StopStrugglingNow.com right now. Nice and comfy, cotton, and like I always say, conversation starters. You don't have to do nothing. Just walk around. All right. But George Maples here, ladies and gentlemen. All right. This is pushing the rental rates up and out of control. A 1-bedroom, 650 square foot in Tampa, Orlando area is around $1,200 per month. And we ain't talking luxury either. Crazy numbers. Exactly. Traditional Florida, where a 1-bedroom used to be under $1,000. 900, 800, even 750. They are over 1,200, and the 2-bedroom is close to 2,000 in Florida. Now in California, it's a whole nother ball game. A 1-bedroom in California at my friend's condo complex, $2,000 per month. I was just like, that's insane. Insane. So this is what's happening. And homes, a 2,500 square foot home, $3,000 to rent, $3,500 to rent. It's out of control, ladies and gentlemen. Don't fall for the trap. Stack money, live below your means for the next 6-8 months. Sit back and watch the carnage continue in the housing market. You want to pick something up cheap? Look, I'm just going to say it again. Since we have people in here, here we go. Victor George Maple says, "Howdy, friends. I will be making a merch order soon." Thank you so much, George Maples. Appreciate it. So just keep this in mind, ladies and gentlemen, because I don't want to alarm you, but just stay with me again. I got to say this. I can't say it enough. $400,000 for a house right now. You buy a house, you're going to pay $7,000. You're going to have to make $120,000 a year. Your mortgage is going to be 7 times 4, 28. So you're going to be into the 3 G's a month just by turning the key, not including all the other expenses. So now, if that 400 drops to 200, and even if it goes up to 10%, guess what? You're still only going to be paying $2,000 a month. Even though interest rate went up, but the housing price went to 50%. That's a different affordability factor there. $72,000 a year for household income versus $100,000. Big difference. So don't get scared that you miss out on buying a home at these ridiculous prices, because there's no way anybody can come in here and tell me, which people are trying to tell you, oh no, prices will never go, they won't go down because they're going to have these corporations and hedge funds and all these billionaires buying up single family homes. Ladies and gentlemen, single family homes are traditionally not investment vehicles for hedge funds and all these companies. The only reason they did it is because they get free money from the government when they're printing money. So if you're getting free money and they're telling you, here, we're giving you a 0.5 or a 1% loan, they don't get loans that's out here in the public. They get these back alley deals that everybody and their grandmother would love. 0.5, 1%. So if I had a 1% loan and a house costs, somebody has a house for $400,000. Seriously? Are you kidding me? That's insanity. $100 for every 100,000? $400, $500 is what I'm paying a month. You would be buying the home. You would just tell the person, I'm outbidding everybody. So what if the home's 400 and they're asking, I'm going to bid 475. Somebody outbid me. I'll bid 525. Who cares? Because I just got this thing for $600. And then I turn around and because I bought up as many as I could in the neighborhood, then I turn around and, oh, what do you mean the rent's only $1,500 a month? Forget that. Rent's $2,500 a month now. And there you have it, ladies and gentlemen. My shareholders are very, very happy because our return on investment is one hell of a return. It's not no damn 3, 4, 5, 6, 7, 8%. We're getting 20%, 30% a month on our return. I'm just saying IRRs. But anyhow, that's the game that they've been playing. So when the Fed start increasing their interest rate where their 1% loan can't be 1% anymore, and it ends up being, oh, wait, they went up 0.75. Now it's 1.75. Then it's 2.5. Then it's 3%. All of a sudden, they start getting into our realm. And they're not going to be borrowing no $30 million at 3% or 3.5%. That's not in their game plan, because what's going to happen is they're not going to be able to raise their rate for that rental person. They're going to go, people are going to be like, oh, housing prices have come down. I can afford a house now. All of a sudden, they're going to lose renters, and now they're going to have places sitting empty. And what's worse, they bought property at, guess what? All-time highs, ladies and gentlemen. So they're going to have to offload them because they already collateralized it. Again, I went over this several times. You guys got to understand, this is chess, not checkers. So when the house comes down and they put all this, they overpaid for the house. They use it as collateral to get more cheap money. All of a sudden, they implode. Welcome to 2023. Buy a house is the motto. I'm putting it already in August. So make it happen, ladies and gentlemen. All right, let's go. George Maple. And as the value of your property decreases, it may take up to 2 years for the property tax to adjust, if at all. Exactly. Very, very good point, George Maple. Damn, I didn't even mention that. When you buy the house right now at $500K, in case you don't understand what he's saying, what happens is the previous home was bought at, let's say, $300,000. So then the assessed value might be based on, let's just say, $200,000. All right. You are the new buyer, and the home went up 20% year over year, 2 years in a row. Right. That $300,000 house is now selling for $420,000. You buy the house for $420,000. The assessor goes, okay, it's assessed for a little bit more now. So now it's $300,000. You're paying more in property tax. Thank you so much for bringing that up, George Maple. I forgot about that too. That's another little ball that drops. And here's the other ball that drops is what he mentions when he says they don't change the assessor numbers. So when the house goes down 50%, 40%, okay, I'm predicting 50. But if it goes down The assessor doesn't come back to you and go, hey, you know, you can pay it. We're just going to drop it back down to 200. No, no, no. They might say they're going to drop it down, but they're just going to go, okay, we're going to assess the value. Instead of 300, we'll drop it down to 260, 275. And you're like, wait, it's a $100,000 difference. What's going on? Oh, no, you can go downtown and try to put in an appeal and all of that. Okay, good try. Pacifying you. It's not going to change. And like Maple said, it may not, they might just go, too bad, so sad. It's staying. So these are the repercussions when you're out here thinking, I'm going to go run up here and buy a house at 0% down because B of A is giving us some sort of, it's for the minority communities. Mother effers trying to get people to overpay for a house. Please, don't do it, ladies and gentlemen. Don't do it. The only way you're going to be buying a house at 0% down is when you find something that's 40% off. So get locked in right now where you want to live. Look at the houses. Get 10 of them, 15 of them on a list. And like I said, save them in Zillow or Redfin or Trulia or whatever platform you use. Save them. Put down the price somewhere so you know what it is. So that way in 2023, you're going to go, damn, Eric was right. Or damn, Eric was wrong. It didn't go down 50%. It went down 60%. Just playing. But all I'm saying is you can sit there and go, okay, this went down 30%. You can see it in real time. So that way you won't get anxious. You'll be sitting there going, okay, they dropped the price, 100,000. But it seems like 500 to 400 is a big drop. But then you go, oh, that's only 20%. That's going to happen before this end of this year. In fact, it's going to happen in October. The homes have already started dropping. So now you're going to have a reference point. Again, I keep saying this because this is going to be big time stuff in 2023, ladies and gentlemen. Duffel bags of cash, get them all locked and ready. All right? Because you're going to need them. It's going to be a awesome time. In fact, it looks like I'm going to be in the awesome time because I'm like, you know what? I've been getting excited about this real estate thing that's about to happen, an implosion. So make sure. So again, business ideas with low investment 2022 is what we're talking about. The Fed's coming with pain has to do with this interest rates. Don't let these guys fool you. Don't let them fool you, ladies and gentlemen. They cannot create jobs. They can't do a jack crap. They only have two things they can do besides creating inflation. But as far as the playbook, they can only increase interest rates or decrease interest rates and loan money. Loaning money means inflation. Gets you into this situation right now. Reducing interest rates to damn near zero gets us in this situation also. No way out, ladies and gentlemen. These guys don't make jobs. They don't create high-paying jobs, even though Powell gets on the stand and talks crazy. So all I'm saying is the feds are bringing the pain. They've already brought the pain. It's built in already, ladies and gentlemen. All that stimulus money, all those tax cut, tax breaks, all this stuff coming along. Even Biden showing up saying, hey, man, we did not need to give out some more stimulus money. All of it over the last 13 years adds up. And that happens when you print 70% of the money supply in the last 12 years. Something's got to give. And it's about to give, ladies and gentlemen. And we're going to take advantage. We're in the SSN Nation here. I want to show you something else that's going down. All right? Because speaking of homes and low investment, here's a reason why low investment is going to be your calling card in 2023. Let me, I messed up a little bit. Hold on. Let me add this to the screen. Let me add this to the screen here. Speaking of homes, I'm going to get into something else. We're an hour in, so please smash the like button so the YouTube gods know we're here. We have a live stream. Let them know what's going on. All right. So you see this here on the screen. We need passive income, ladies and gentlemen, right? Because look here, home buyers are backing out of more deals as high mortgage rates persist and recession fears linger. Since we're talking about homes, right? Nationwide, this is in August, 63,000 deals of existing homes fell through, and 16% of homes that went under contract that month, cancellations were 12.5% in July. It's going to keep rising. And then it's going to turn into nobody's buying. All right? So just keep that in mind. So again, stay with that. We're going to get into passive income, and we got to talk about SSN lifestyle. Ladies and gentlemen, if you want to earn up to 5% weekly payout, then you might want to check out the 5100 passive business opportunity. The link is down below. I'm going to show that on the screen eventually, so we'll talk about it. But again, you can use PayPal, you can use USDT crypto to get in. All right? Minimum 100 on up to 2,500 maximum you can put in. The 5,100 is a weekly payout. And even though we have not reached 5,100, anybody who is in, they are receiving first week, 2 weeks ago, 4.1%. The other week, 5%. This past Sunday, 5%. Up to 5% payout is what everybody's receiving in the 5,100 business opportunity. All right. Passive income opportunity is what it's called. The link is down below in the description if you want to join in and further information, because we do have to talk about low investments, right? If we're talking about so far 14.1% in the last 3 weeks, not bad. If we can reach that 19 or 20%, that would be pretty good per month, don't you think? I'm just saying. That's part of the SSN lifestyle. George Maple, we have SSN lifestyle, as you know. It's part of the Ring of Fire. That's business opportunities there. So once again, I get excited. I can't help myself with that, because people have a chance to improve their life a different way. All right. You have different ways that you can get returns on your money. And so why not? Here we are right here. I'll just put it up on the screen. This is SSN Lifestyle. It's the sister property. So therefore, I'm the CEO, in case you're new here, of SSN Lifestyle and founder. So I've created a vehicle where people can earn extra streams of revenue. Here's one way you can earn extra streams of revenue. Again, you can choose an amount. It could be 100 and up. And we were going to wait till we got to 5,100, but people have put in $500. I didn't think it was fair that what if we never reach 5,100? And so they had money sitting there. So I was like, let's just kick out some cash every weekly payout. So far in 3 weeks, when we started the first to pay out, it's like I said, 14.1%. That alone, if it was able to do 14.1% every month, you would still love that, because there's no other place that's happening that you can get that. So that's pretty cool. So again, you can go there and look at it. The link is down below in the description. That's a low investment, in my opinion. You can start with 100, but then of course, 20% means you'll have $20, right? It might be more. It's going to be more than 20%, because within 30 days, because the next Sunday is going to be 28. So that'll be 28 days, right? So it should be around 18, 19%. So $100, $18 return. I mean, that's not bad. $100, another $18, $19, $20 return the following month. That's not bad, ladies and gentlemen. Pretty good when you start thinking about it. And if you put in more, think about it. It starts going. All right. Just saying. Okay. Now, here we go. George Maple. Hey, Eric, I don't think this is the same stock that made Warren Buffett. And like Rich, what do you think? This thing seems like a video game these days. Exactly, George Maple. It is a video game. These guys have gamed the system. The only difference between 1930 and now, there isn't one. In 1930s, they created the stock. Well, not then, but the stock market was created based on a piece of paper. So the piece of paper was a stock. So what happened? It's the piece of paper is only worth parts of a penny at the time, right? So then they turned around and started waving papers around going, this is worth $5. This is worth $2. And then people would buy them. I mean, there's no difference. And then they would manipulate the price. Same thing's happening right now, except now they do it a little bit more sophisticated because it's electronic and they can get away with a lot more. They can front run our deals. They can make you, they come out with apps like Robinhood and Webull and they front run you that way. Then they tell you an IPO is coming out. How much will you pay for an IPO? Put in your price now. So now they know how much people are willing to pay before the IPO comes out. Crazy tricks. And people are going along with it because everybody needs to make extra revenue. We can't sit here and lose 10% a year on your money or 20% a year on your money. That's not doable. You have to make generally more than 10% just to stay in the ball game, just to be anywhere near even for what you can buy the next year. So we've got 40% inflation over the last 2 years. Nobody gets a 40% increase in pay. Even if you have your own business, trying to increase your profit 40% is insane. That's crazy. You made $500,000 this year. After NOI wise, let's just round it to half, 250,000. And then somebody comes to you and go, hey man, you need to make 40% more. So you're sitting there like, so wait, hold on. You mean like I got to have 310,000 profit just to buy what I can buy now or this past year? And they go, yeah. You'd be like, that's not going to happen. You're probably going to say, I'll give it a shot. But that would also mean your revenue number went to almost more than 50%, which that starts putting things in perspective, right? Now all of a sudden we go from 500 and we got to do 750,000. See, that's when things start getting a little wacky. So again, to the point, this thing right here that George Maple's saying, exactly right. George Maple. I just started looking at that earlier today. SSN Lifestyle. That's right, George Maple. It's going down. We're creating something out of SSN Nation. All right. Because of you guys, I decided, and actually it's because of what happened. I've been doing this for 4 years. I just got tired of all the shenanigans. I just was like, this is getting crazy. We got to help people out here. We got to come up with new ideas. There's going to be somebody here with new ideas. I don't have new ideas all the time. Somebody else might have new ideas. That helps people. But sitting around here saying we're going to put our money in the stock market, buy gold and silver and leave it in a bank, that's ludicrous. Meanwhile, the Federal Reserve printing up money like it's water, that's crazy. So we have to have a plan. Most people don't have a plan. All they know is what they're taught. Get a job, go to school, get a job, and then save your money. But saving your money is no good if inflation is 10%. What good is every piece of money that you have stored at a bank, $5,000 at a bank, you can only buy $4,500 of that $5,000 next year. That does you no good because it's now buying power $4,500. So anyhow, this is why I started this. Eric, is the 5,100 opportunity separate from the utility nodes? Yes, Victor Marrero. If we aren't reaching the node amount, can we shift that money to this vehicle? Victor Marrero, yes. I will say yes. We will see in about, just let me know what you want to do. That's all I'm saying. Because the 4,500 debt box node opportunity is what Victor Marrero's referring to. And in fact, let me go show this one. Another low opportunity, now that we're in the SSN lifestyle phase, here we go. This is for a debt box node. This is backed by commodities, oil, natural gas, gold, farm, otherwise known as grow, so it's agriculture. They're backed by real world assets. So therefore, we have a $4,500 business opportunity debt box node, and we have $500 in there. The node, we need $1,250 or more to buy nodes. Even if we don't reach the 4,500 number, then we go with the node that we can buy, but it has to be, we have to reach 1,250 or more. If you're interested in this earns rewards 24 hours a day because it mines. That's what the debt box nodes do. They mine. And so therefore you're earning rewards 24/7, 7 days a week. So that's how this works. In fact, I wasn't going to do this part, but I'm going to actually go see what the node's doing because we already did one. We got into one node already, our very first one. So I'm going to log in as I'm talking, but I'm going to get into that in a second, and just to show people what it looks like when it's mining. And these rewards in the 4,500 is a little bit different. The rewards in the 4,500 go like if you only earn a percentage of what you put in. So like $250 is the minimum that you can put in. That means 5.5% of rewards is what you get to take out. Okay. You can only take out rewards on the 4,500 program at January 15th and August 15th of every year, or let it ride. Your choice. But either way, you're going to lose 10% of the rewards. All right. Just so you know. Now, let's go to, I haven't gotten there yet. So that's just the tip of the iceberg. There's 4 or so more nodes. Do I have a video about this? I think I do. So why don't I show you guys some video production of this? I'm going to go with this one here. Let me take this off real quick. Here you go. Check this out.
Blockchain is redefining how we operate as a society, from supply chain to payment solutions. But the multi-step, profound essence of the technology also creates conditions that add confusion to the cryptosphere, sometimes feeling like opportunities are reserved for the upper elite. Revolution occurs when the physical and digital converge at a single point, where a whirlwind of ideas demolishes old concepts and builds something new amidst the ruins. Introducing the decentralized, eco-friendly blockchain technology known as the Sept ecosystem. Sept is a vertically integrated, all-inclusive and home-based solution to blockchain complexities. All of the projects are unique in that each one is supported by or linked to a specific sector in the commodities market. Moreover, the collision of crypto and precious natural resources have generated a token that binds the entire system together. This is where crypto meets commodities. The Sept token is the central support and utility token for the Sept ecosystem. It features a growing list of token projects that will boast swap pairing with the Sept token. Other ecosystem projects are deflationary, with transfer fees to support the network, discouraging frequent trading. Because of this, ecosystem token holders will be encouraged to transfer their project token value to the Sept token before transferring and using it for trading and liquidity. Given its central role on the platform, the Sept token will generate increased demand as more and more projects enter the ecosystem and projects mature. At its core, the Sept ecosystem collectively gathers all sectors in the commodities market. Black Gold, or BGLD, is a revolutionary blockchain project based on the physical production and sale of crude oil. Natural Gas, or NATG, is an innovative blockchain project designed to streamline efficiencies in the world of exploration, and is working to enhance the physical production and sale of natural gas. Grow's groundbreaking technology fosters participation in the growing industry of high-yield agricultural products. Digital linked metals, gold, silver, platinum, palladium, use cutting-edge technology to locate and extract rare precious earth metals. Along with our partners, both foreign and domestic, we ensure every metal token is linked with its physical counterpart. With many more projects on the horizon, the main goal of the DEPT ecosystem is to present complex commodities markets to you in a way that is easy to both understand and participate in, rewarding you for your support. The DEPT ecosystem is where crypto meets commodities. We are committed to projects that empower you, influence history, discover unexplored territory. Shift perceptions with thedebtbox.com.
All right, ladies and gentlemen, I threw out a different video than normal, but that just gives you an idea that they're dealing with commodities and it's backed. Each node is backed and the node prices vary depending on which node you get. So that is one of the things that I'll put up on the screen and show so you can see what it is. So this is the prices right here for each one. So that's why I'm saying if we get to 1250, that means we don't reach 4500. That means we'll get an XPLR node. If we reach 1500, then we'll get a DLG. But if we reach 1250, then we're probably going to get a DLG anyhow. I'm just saying. And if we reach 2500 and we don't reach the 4500, then, you know, we'll have choices to make, either grow or DLG. The DLG, though, the rewards are actually backed by gold. You can actually trade in your rewards for the physical gold if you want to on that one. That's one of the rare ones because all the others, you can't get oil, you can't get natural gas. You're not going to be able to have, you know, agriculture sent to your house that's going to be of any value. So those nodes keep generating. So there you go, ladies and gentlemen. And now I'm going to bring out, hold on, let me do it. I'll make it show on the screen. Here's what the back office looks like, just so you get an idea. I see it's taking its sweet time because I actually, oh, wait, I probably shouldn't have done that, but we'll see what happens. Oh, there we go. All right, so here's our dashboard, all green. Of course, the stock market went up today. All green, of course, naturally. All right, here's where we're at. All right, this is what it looked like. Here's the node. All right, and these are all nodes except for the debt. I don't think debt is node. Even if it was, this all started in November of 2021. So this could have been a node when it first came out, but I do know that's the mother coin. So you can exchange all these are all coins and nodes into debt. Debt is on like PancakeSwap and other platforms such as BitTrue, Bitmart, and I don't know which others. So you can always trade these tokens in to here. So this is what we've accumulated so far. All right, just so you guys have an idea. So mining cycles are 24 hours a day. This is what you're looking at here. 465 XPLR was over the last 24 hours, 8 p.m. Eastern to 8 p.m. Eastern. And we have a total of 11,463 XPLR. All right, that's what the total is. And 45 because it's after 8 p.m. So far, after 8 p.m. Eastern. And the token price is 0.00471. I believe this was higher before, but I'm not sure. I'm not actually paying attention because you're mining. You want these rewards because what's going to end up happening is when they burn these, that's going to increase value theoretically. All right, because there'll be less tokens available, more demand. The XPLR is a scanning system that goes on a satellite. They're going to launch their own satellite That's what this node is about. And then they're going to charge people to scan to look for oil, gold, natural gas, and other products such as platinum, like rhodium. So therefore, this is going to be valuable down the road, much more valuable when they have their own satellite. Right now, they're being charged $70,000 to scan for a few hours right now. So they said, forget that. We'll just get our own satellite where we're going to charge people that money, and we'll allow other people to tag on the satellite and get some more money from that too. So that's how it works, ladies and gentlemen. So this gives you an idea. That simple. And that's it. We started, what was this, August 13th? So almost in another 6 days, I think, well, I don't know if it was 13th, but anyhow, it was around August 13th or 14th when the mining started happening. So that's how many has been produced in a month, 11,463. I mean, in 3 weeks. So next week, 4 times 6, that should be about another 2,700. So we should be at around 13,000 XPLR. All right. Now, there is a member who has let the cat out the bag before. Mr. Cool bought 3 of these XPLRs. So his total is probably close to 3 times this amount. He probably has 31 or almost close to 30,000 of XPLR tokens. That's right. So there's some people here that decide to go do it themselves instead of being in our business opportunity. And so there's a link down below in the description that's called IX Global. You'll see that link if you want to buy the node yourself and join in. IX has these nodes at wholesale price. So you can go sign up with IX Global. You get to buy it these prices because Debtbox themselves sell these for more, anywhere from 20,000 to around 52, 53,000 for these nodes. So you don't want to buy nodes at those prices. You want to buy nodes at 1,250, 2,500, 4,500, right? So you can do it yourself. You just have to pay $50 to be a customer, and that's $50 a month, and then you can buy nodes. Or you can pay 115, 145, or 180, and then that allows you not only to buy nodes, but then you'll have a link like I do down below in the description where you can refer other people, because they do have what you would call residual income from signing up other people and other people signing up other people and other people buying nodes. You receive compensation for that. Same as in SSN Lifestyle. We have that at SSN Lifestyle. Same thing. You can sign up for free, meaning you don't have a monthly payment at all. You still receive commissions by referring other people. Or you can sign up as a member and then you start receiving additional perks. By the way, speaking of additional perks for SSN Lifestyle, congratulations for the month of July. Whoever was a member in the month of July and was current, you received a payout. It was either yesterday or today, I can't remember. There's a payout for bonus pool money was paid out. All right. So that's pretty cool. So, but you do have to be a member at SSN Lifestyle. So there you go, ladies and gentlemen. You want low investment opportunities? You have them. And stock market is included in that low investment opportunity, because now you can buy fractional shares, whether you have Robinhood, Webull, it doesn't matter who you have, whichever platform, does not matter. All right. Or you can invest in crypto projects, and you also have low investment opportunities. So hopefully that helps you out with that. Let's see what else is going on. All right. Let's see. Here we go. I am willing to add additional funds, but I'm trying to decide on the best vehicle option for me. Exactly, Victor Marrero. I understand. Everybody's an individual. Sometimes you can't go. It's always reminds me of when you're a professional and there's other professionals in the room and you're in the same craft, but you're all independent. And so I can't be mad if this guy gets $75,000 per play, and another guy gets 100,000, and another guy gets 500,000, because it all depends on that individual and what they're willing to do. Somebody said 75,000. The guy said, okay, in my circumstance, I'm happy with that. Another guy said, no, I'm not happy with that. Will you give me, I think I'm worth more. So then he gets more. So it all depends on the individual, on what they're trying to do. So Victor Morrell, that's cool. I'm going to run another video. I was going to do that last week, but things have come up. But I'll try to get another video for Debt Box out. And I'm going to put a timer on there actually after this video. And then if you want to do something, that's fine with me, but I'll put a timer on there. And if we don't reach that number, then, you know, we can do whatever with your decision. Either way works fine with me. All right, Wilson Koo, we're seeing a lot of activity on commodities. Exactly. You're going to see a bunch, because that's the only thing that makes sense. If you can't be in the stock market, you can't be in the real estate market. And the only other option is gold, silver, and precious metals, except guess what? They're manipulating those. So those even are coming down, which is hilarious. So then crypto comes down. What's left? Commodities, right? That's where we're going. Or you buy dividend stocks like Warren Buffett. All right, that's your options. Boss, what investments does the 5100 opportunity entail? 5100 is no business opportunity. It's a passive income opportunity. You earn up to 5% payout weekly. Every Sunday, there's a payout. All right, from the previous week. It's so, in other words, what's today, the 7th? So the weekly payout from the, where are we at? The week before, the 27th through the 3rd is going to be paid out this Sunday coming up. And then the 3rd through the 10th is the following Sunday, which would be 14, 15, 16, 17, 18. Sorry, I'm off. The 21st through the 28th is going to be paid out this Sunday. The 28th through the 4th, 28th of August through the 4th of September is going to be paid out the following Sunday. So I think we went 21 through 28 was paid out this past Sunday. So the 28th through 24th is going to be paid out this Sunday, actually. So yeah, the 21st through 28th was paid out a few days ago. So every Sunday. So you can join via PayPal, or you can put something in via crypto, USDT. And after you decide USDT, it might be a different net chain. So you might pick the BEP20 chain, or you might pick the TRC20 chain, or you might pick the Polygon chain. After you decide to join the 5100 Passive Income Opportunity Fund, you can actually choose at that time how you're going to send your money in. All right. Now, if you decide to be in the 5100 or anything, you need to check the box on your way out. If you're going to use PayPal and use a debit, credit, or checking account, whatever, then you need to check the I want to pay for the transaction fee. Because if you don't pay for the transaction fee, 3.5% will be coming out. So you might have said I put in 100, let's say. Well, 250 is the minimum for debt box. You might say I put in 250, but that means you're going to have 241 is what that means. All right. So just keep that in mind. All right. So hopefully that helps you out. How do we track balances on the 5100? Is there a dashboard? This may have been asked before, but can't recall. What do you mean balances? 5100 is paid out weekly from whatever you put in. So in other words, the tracking you see is on the screen, if that's what you mean. So you see right now there's, 500s in there. So you put in your 250. It's not shared. So it's not shared. It's not like the debt box. All right. It's not shared. So you put in, let's say you put in 250, and then it earns 5%, let's say. So that's the number that you're going to receive on the weekly payout. 4.1% on your 250. That's the weekly payout. All right. So it's not a shared thing like the debt box. Debt box is shared. So that's a percentage based on what you're going to be taking out. All right. But on the 5100, it's 1-to-1. So what you put in, 5%, 5%. So everybody who put in on the 5100, they get 5%. All right. So that's pretty much how we do it. There's no tracker for that because it's 5%. Up to 5%. My mining balance is 27,129. Yep. I figured you were going to be in the 20s up rapidly because we're in the 11s. So yeah, you're going to be at the end of the week, or well, I was using a month, but yeah, you're going to be in the 30-some thousands for rewards, which is awesome. He decided to go solo. Laverne Pennis, congrats. At what rate are your dashboard increasing day to day increase? I can already answer. We started out at 485. Again, August 13, 14, 15, somewhere in there. We got 485 XPLR. Now, the last 24 hours, as you saw on the screen, it's let's see, where's it at? Did I close out? Here it is, 465. So it dropped 20 XPLR over the last almost month. And that's because more people are buying the XPLR nodes. So the nodes are, the mining is spread out over the nodes. So this has the dashboard. This is the debt box node has a dashboard because it's mining. So just so you know, that's how we do it. And it's 465. This is going to continue to go down simply because as more people buy nodes, that means more people will be in the network to receive their mined token. Pretty simple. Hopefully everybody understands that. If you have any questions, please ask. But then again, if you have any questions and you're not a member of the channel, well, let's just put it this way. You're going to have to wait till after the video's in replay. Then you can leave a comment down below. 1 hour, 42 minutes in. Please like the videos because it's free of charge. And you're in the SSN Academy, SSN University, SSN Nation, the No Guru Zone. You're here. We're talking about business ideas with low investment tonight. Feds are coming with the pain, and it's about to get a whole lot worse for you. And what I mean is inflation is not going away. So don't think that. So prepare yourself to earn additional streams of income. It's going to be necessary. It's a necessary evil. There's no way you can stay ahead, and they aren't going to let you off the hook. Even when you get more passive income, guess what? You're going to have to get even more. It's not going to be, you're not going to be able to rest on your laurels unless you made investments. That's the only way you're going to be able to rest on your laurels, is having passive income coming in, and you have investments out there that generate money, like a Warren Buffett, like a Charlie Munger, like those guys who invested in companies 40, 50 years ago and then just kept reinvesting their dividends and letting it ride and then buying up companies. So again, that's the mentality that you have to think about in this day and age. It's not just good enough to sit there and take a $45,000 or $55,000 a year job. All right. You can't rely on that anymore. And that's why there's going to be problems with our economy for who knows how long. You're not going to find people willing to work anymore because it does them no good. You can't go to work if it's going to cost you $800 or $1,000 a month for childcare. How are you supposed to go and make 4 G's a month? And then 1 G has to go to childcare. And then the way things are going now, 1,000 or 2,000, whatever the shared or single family income is, this is getting crazy. So it's not going to get any better. Even if we come out of this so-called recession, it's not going to get better. The cost of living is in stone. It's going to cost more. So everything, food, everything, your maintenance, your electricity bills, everything, property taxes, all rising, insurances, all rising, Cable bills, all right. There's no way you can just stand pat. Even if you have a business and your business today generates $3,000 per month and you live off of that, let's say, in about 3 years, that's not going to be enough. So you can't just rest on your laurels, all right? So you always need to find these other things, which means you have to take risk, unfortunately, all right? You're going to have to take risks, ladies and gentlemen. Let's see. But how is 50? What's generating the rewards? We're using stock and we're using crypto, just so you know. And it's all because of Vanessa Comegate too. She's like, hey man, why don't you use that for some generation of funds? I said, okay, fine. Why not? But trying to be safe without the high risk. So we have stocks, dividends coming in, and then we have some coming in from crypto. That's why. And it's you don't want to risk too much in either direction. Victor, last cycle, I mined 1395. He has 3 nodes, and he bought 3 of the XPLR nodes. So that gives you an idea. So it should have been 3 times what, 465? Is that what it comes? Yeah, 3 times 465 does equal 1395. Thank you for that, Mr. Cool. Very nice. And that's compounding. You got my attention. No. The nodes don't compound, Victor Morero. That's the whole point. No compounding. There's nothing they can do. It just generates the 465. Let's say it generated 465 for life. There's no way to compound it. There is a way, kind of. But at this point, there's no way to generate enough to buy another node. Because another compound, you would have to be able to get to buying another node. But traditional compound, no. You're not going to be able to put the money in and then earn some more rewards off of the 465 that was reinvested. There's no reinvestment with the nodes. All right. So 20 people is the max for the 5,100. No. A person can put in $100 minimum, I believe, for the 5,100. So in theory, there could be 50 different people. I'm just saying. But we already have 500, so there's only, 5. So we have 4,600. So in theory, you could have 46 people. It's different people. All right. Can you add to your original 5,100 deposit? For example, I start with 500 today, then in 2 weeks I send in. Yes, you can do that until we reach the 5,100. So yes, that can be done. But once we reach the 5,100, nobody can throw in anything extra. That's the cap. That's where it's capped at. Or is that 2 separate buckets? No. For example, I start with 500 a day. Yeah, so you can put 500 in the 5,100, and then in 2 weeks I can send that 500 additional, right? So you'll have 1,000 to you. And is this the second 500 added to the first? Or is that 2 separate? No, it's the same bucket. You'll still get your up to 5% a week. Same thing. There's no difference. So in other words, instead of getting, let's say you started with the first 500, and let's just say we got 4%, right, to make it simple. So that'd be $20. Then you came in and added another 500, and then let's just keep it simple, 4,000 again. So now you have 1,000, but now it's 4%, so that's $40 payout. All right. So it just keeps going. It's based on you. You're your own bucket, so to speak. If you're going to break it down bucket wise, everybody is their own individual. So whether you do it or Tom, Dick, and Victor does it, and they all put in 500 each, all of you receive the 4% or 5% or 1% or 2%. It's up to 5%. So you all get in that one. So it's not separated such as, you put in 500 now, then put in 500 later. So no, whatever the earning is for that week cycle, that's what you're going to get. And if you put in 1,000, then you get your 5% based off of the 1,000. If you put in another 500, it's 1,500. Then you get your whatever up to 5% up to 1,500 value. That's how it works. Keeping it simple. It's very simple. No compounding either, by the way. All right. So hopefully that helps out there. Okay. I thought 250 was the minimum. George Maple. On the debt box node, 250 is the minimum. On the debt box node, if you want to get in on that, that's 250 is minimum. And let me see about this. I can't keep them all straight in my head. And if you do the passive income opportunity, I believe it's actually 100 minimum. I'm not even sure, but I think you can pull the trigger on that. In fact, I'm going to go look. But I have the minimum showing is 250, but I believe you can do less than that if you wanted to. All right. Now, we have something near and dear. Yeah, let me see if I can put in 100. I have something near and dear to Vanessa Comagate, the fingernails to go. We talked about this last week. The minimum on the 5100 is 250. Won't let me put 100 as a number. All right, so just letting you know. Just letting you know, 250 is the minimum on the 5100 as well. When I put in 100, it doesn't ring anything up. So 250 minimum on debt, 250 minimum on passive income opportunity, and I'm missing one. I'm missing fingernails to go business opportunity up to $10,000. Nobody wants in on that business opportunity. That's passive income all the way from a business perspective. All right. The max is 2,500. Yes, on the 5,100. That's right. Thank you, Vanessa Comagate, for bringing that up, because Victor Marrero, if you start adding these 500s, once it reaches, you can't put in more than 2,500. Just so you know. All right. The max is 2,500 for any individual person. Just so you know, whether you did 2,500 straight out or in increments. All right. So thank you for bringing that up. So what is the max for the 5,100? 2,500 is the max, George Maple. As any single individual, that's the most you can put in. All right. Because other people should have an opportunity is the reason why I designed it that way. All right, here we go. I see. So once we reach 5,100, whether one person or 20 people, then that batch closes. Exactly, Victor Marrero. We can then start another 5,100 batch? Yes, we could. Or are we only doing this one time? No, we could start another batch if we reach the 5,100. It's not going to be like a thing to do like right away, but yeah, we could do another one. So you got it exactly right. Just so everybody, thanks for asking and talking about that, because most people might not understand. That's a number. Once we reach 5,100, that's the closeout. There won't be anybody else accepted unless we do it again. All right. So there you go. Okay. On the max. Thanks. No problem, George Maple. Thank you for asking, everybody. So that's one of the things that is very, very beautiful. And I guess, I don't talk about it enough, but I'm just going to go over here because I should talk about it. In fact, I should do videos more about SSN lifestyle, because it's off the charts, in my opinion. Because, ladies and gentlemen, talking about low investments, where else? I mean, you can sign up with Amazon. You can sign up with a whole bunch of places to be an affiliate marketer or referral marketer, right? But they don't have the diversification even of SSN lifestyle, even though we just have limited products right now. So what I mean by that, I'm going to show this on the screen. What I mean by that is, like, I'm going to pull this up. This is a health product that is actually a cream, and it has over 25 health benefits. So there's iodine in here that helps with your thyroid and helps balance your thyroid out, which actually is the gateway to your brain, and it helps your system filter itself. And it has magnesium in it, which magnesium actually helps with reactions within your body. And so, in other words, your body may not absorb certain ingredients might not be absorbed in your body, like vitamins, minerals, and nutrients, because you're low on magnesium, because that's what you need in your body. You don't want to be low on magnesium. You won't be able to process or absorb certain nutrients. D3 helps with your bones. Hopefully everybody knows that, but there's other things associated with D3. And MSM actually helps with your joints and rheumatoid arthritis, right? Those are some of the benefits. So just out the box, that's why it's called the SSN Lifestyle Body Balance Cream. And again, notice cream gets into your bloodstream versus taking a pill. But here's the thing. It's $34.99. So you can send somebody over here. You can have a free membership or you can have a paid membership. You send somebody over here. You receive commission for referring somebody to basically nobody else on the planet has this product except 2 or 3 places now, all right? Because you can also go to a store. This is commissionable. You can go to a store and say, hey, here's a product that I have, and I can get you 50% off. Check this out. Here's all the ingredients. And look, no parabens, no nothing. Check this out. No smell, no nothing. And no GMO, no parabens, no nothing. You sit there and say, oh, well, what's the breakdown? Well, if you order 24, we give you 30% off. Here's the price. $34.99 is retail, 30% off. Most stores, they want 50% off. Well, if you want 50% off, we need you to upgrade. You got to buy 4 dozen, at least 48. So you get 50% off. This is commissionable still. So you don't actually have to order all 48 and then carry with you unless you want to be big time and go around and do this and set up a table, maybe even in the establishment, and help promote and sales. But at the same time, you can also refer people over here. So again, it's set up where you can actually make commissions on something you don't own, right? That's what you want, a la Amazon, a la eBay, a la everybody else, right? So that's just something. And then we have other products as well. And in fact, you'll see this one, D3 and K2 magnesium cream. That'll be labeled tomorrow. All right. So you guys got to understand K2 is an awesome ingredient. All right. And then bone and joint support cream has magnesium, MSM, and D3, because you need a healthy bones. As you get older, your bones get brittle, and you don't understand why some people fall down, break their hips, and do all that. That's because they're lacking in certain nutrients. And if you're lacking in the magnesium doesn't process your D3s, and then you have to make sure there's other ingredients inside so your body can absorb the D3. All right. So that's what's missing in a lot of people's diets. You can't hardly get this stuff from your food anymore. So therefore, as you get older, you get brittle and you don't feel as good. Things change. So I'm just saying, ladies and gentlemen, and never mind when we have vacation rentals and things like that, because that right there is just added bonuses. Somebody called me saying, hey, I want to stay in Hawaii, oceanfront in Honolulu. So I'm sitting there like, okay, I can get you that. Somebody says the Indy 500 is coming to Las Vegas. Apparently they're going to do a street run in about a week, and Saturday, 10 days from now, roughly. And apparently where the Desert Club is across from the High Roller, it sounded like the person says the cars are going to be coming down that street. I was like, okay, this is going to be interesting. So all of a sudden people started asking, hey, can you see the street from your unit? I was like, why do people keep asking about this? So once again, you have these vehicles where you can actually refer people and make money. The SEMA Auto Show is the first week of November. You can refer people to stay across from the High Roller, which also is up the street from the Sands Convention Center. So now, walking distance to the Strip, and it's a 2-bedroom condo, sleeps up to 6 people because nobody goes by themselves usually. So therefore, you have a way to charge. Our charge is $40 30% or 40% below when you go online, even at Priceline and if you went to Expedia. So that gives you an opportunity to make money, and not just $10, $5. This is giving you opportunities that if you make that deal, you're going to be getting like $100, $150, not just these little bits of kibbles and bits. So I'm just saying it's all sustainable. And when you have 3, 4, 5, 6 products or more, then that means during a course of a month, if you did actually was active and promoted and you made $100 every, let's just say 3 or 4 days or once a week, $400 extra. Come on. That helps a lot of people for something that's on the internet. So I'm just saying, ladies and gentlemen, those are the opportunities that you can do for yourself, whether it's free or whether you sign up as a member. If you sign up as a member, there's going to be some other perks that come out, because a membership into SSN Lifestyle means there's other perks. All right. So go check it out. The links are down below for a bunch of different things. And now we're 2 hours in. So please smash the like button. Let the YouTube guys know we're here still. And if you like what we're talking about during this live stream, please subscribe to the channel. Click the all notification bell. And also, due to the lack of notification by YouTube, please go down to the very bottom and sign up for our newsletter. That way, when I email you, when I do live streams and when I drop new videos, I will email you. So that way you will get an email at least, because they only send out, we have over 14,000 subscribers. They only send out roughly 2,200 notifications. That's it. All right. Just so you guys understand. It's not like they send out 14,000 or 13 or 10 or 8,000 or half. It's less than half. Damn near 15% get notifications. All right. So that's why we have to stay on top of it like that. Okay. Here we go. What is your process to introduce a product business? George Maple, somebody emails me, business opportunities at SSN Lifestyle is going to be based on criteria that's going to have to be met, but people can send me anything, and then I'll look at it and then see if we'll put it up. And then, of course, it all goes, like, for instance, fingernails to go, passive income. That's different. People don't have a vision, don't see it. I haven't presented a vision for it, so nobody's interested in investing that so far. So now we'll go along with, I mean, anything that comes along, it goes into the ring of fire. That gives people who are members of SSN Lifestyle an opportunity to come into a ring of fire. So just send me an email at support@stopstrugglingnow.com and I'll look at it. Sorry, but to be clear on the 5,100. So I can invest up to 2,500, right? Yes, as an individual investor. So 5% of that is 125. Is that this per week? Yes. If we're up to 5%, yes. That's roughly what it would be. 125 per week. That's exactly right. So 400 per month. That's exact. So we'll take around 5 months to ROI. Do I have this right? You are approximately right. If I'm pretty sure that's the numbers, because that's 400. Yeah, you're right. That's what it's going to be. But you got it right. You're pretty damn close. Pretty damn close. But you got it right. And after that, all good. With some, well, I won't say this yet because I got to wait for a couple more about another few cycles to go by. Then I'll do something else. We'll be talking differently in a couple months, hopefully. Everything's going well. All right. So hopefully that answers your question regarding that. Okay, ladies and gentlemen. Now let's get back to the business at hand, because we talked about real estate. And again, this is the mantra I want you guys to understand. Passive income 2022, that was for a reason, because we knew inflation was going to keep going. Next year, it's now time, after you got that passive income, after you got those assets, 2023 is the time to implement Plan C. Buy a home, simply because that is not an asset. but it's going to be an asset to you over the short term when the Federal Reserve starts reducing their interest rate. So what I want to do is I'm going to show you this because, again, there's some doubters out here that do not believe that the housing market will not go down. So I want to show this too. Not only are home buyers backing out of deals, what about this here? Look at this here, ladies and gentlemen. Look at this. Let's see. Let me get this on screen. I don't know what happened. It should have showed up. No lots, no problem. Developers turn retail into rentals. So all those people that were saying developers or these hedge funds were going to be buying homes, nah, they don't really like single family homes. They prefer to actually have multi-family homes. Look at what they're doing. They're buying these old malls, retail centers sitting undeveloped because there's no use for it anymore. And guess what? They have parking lots, they have plumbing, they have electricity, they have all of it built in. So all they have to do is change the spaces into whatever they want, whether it's for probably not retail, but they're changing it into multi-family, ladies and gentlemen. See this? Open land scarce. Multi-family builders are pursuing adaptive reuse. This is in April. See, Dillard's over here, store closed. Here we go. In fact, that looks like Sacramento Macy's right here, quite frankly, but then all Macy's buildings are the same. But at Sunrise Mall. But this is exactly 2 levels, elevators. So you already have elevators. You already have escalators. So all you have to do is just change up. Put walls in between. Turn them into apartments. This is what they decided to do. You already have parking. You already have the infrastructure. You also have loading docks. You also have underground parking oftentimes. You also have parking garages already. So you nixate a whole bunch of stuff that you don't even need to put in and put in more investment money into. No more concrete. Think about it. This is genius as well. But this is what's going on. A lot of retail centers are out here. The multifamily market is on fire. Of course it's on fire. This is where you need to be, ladies and gentlemen. This is not a low investment, but it is an investment. We're the big boy club here. We just can't talk about single family homes. We got to talk about multifamilies. This is genius. There is a bunch of properties sitting out there right now in your city that you live where the guy's been sitting there and they have these mini malls or whatever you want to call them, or regular mall. And the person is sitting there going, we can't even sell this for $10 million. Amazon's trying to buy it, potentially, if it reaches, is in their area of a sphere of influence that they're trying to do in a certain area. But at the same time, you could actually be buying one of these. Hey, is Wilson Koo still here? Wilson Koo, do we still have those rehab loans? Let me know if I can do a rehab loan on this. If you're still here, let us know. Can I actually buy a mall for, let's say, $10 million, come in with my plan, and I say, okay, I can put in, let's say, 50 apartments in here, along with not only that, I'm not going to build out the whole thing for apartments because remember, some of these spaces are actual restaurant spots at the mall. So now I'm going to reopen these existing restaurants, charge people monthly rents, and people live there. That's right, ladies and gentlemen. How about that? So this is why they're doing this. This makes sense. Think about it. All across America, there is bare malls or bare retail centers, outdoor centers. They're just sitting there vacant. Nobody can sell them. Talk about a great business opportunity. I know a lot of you are sitting there saying, hey, I can't buy this. Hold on, ladies and gentlemen. Let's hear from Mr. Koo. Let's see what he says. All right? Because there used to be a rehab loan that was doable. So if you went in somewhere and said, and the guy goes, okay, I did want 10 million. And then you say, hey man, look, I got to rehab. I got to do this, that, and the other. It's going to cost me $400,000 or $500,000, $600,000. I can't buy this for $5. Okay, I'll give you 3.5. And then we put in 500. And then what do, ladies and gentlemen? When we're putting this structure together, and let's say Wilson Koo says, hey, we still have those ARV, after rehab value type loans. After retail value, it's going to be worth $5 million. But what do? When we're putting this together, we're going around to get businesses and to get a lease for those restaurants. We want that 3-4 G's a month, whatever, for the restaurant. We want that triple net stuff, right? Because we're building apartments inside this place. So that value is going to be enormous. And keep in mind, it's a mall. So any outside store, people can still come and visit just like if it was a mall, except people live there. But now people are coming to eat. You have parking. You have everything there. I love it. It's beautiful ideas. This is what's going down. This is the future. Why build something from ground up, ladies and gentlemen? And by the way, you know the motto around here. You do what the top 10 percenters are doing. All right? Think about it. Let's see if Wilson Koo is in here. Let's see. Not too shabby. No, not too shabby at all for that return in 5 months, 5%, up to 5% a week. But think about this, ladies and gentlemen. Let me know what you think. What do you think? What do you think? I think this is crafty, like they say. They use the word right here. Not to be deterred, crafty firms are turning real estate lemons, retail stores, movie theaters that shuttered during COVID into multifamily lemonade. Hey, I'm going to tell you guys right now, there was a place in like 6-7 years ago. Anybody here? Oh, I know Professor Auntie Val. Remember? Well, wait, does she live in? I think it's, hold on, let me think. Where's it at? Oh, it is Fort Lauderdale. Yeah, Fort Lauderdale. Remember the downtown riverfront where there used to be the, oh man, I don't know the street anymore. But anyhow, downtown riverfront that used to have the restaurants. And then they took the restaurants and then had the movie theater. Come to think of it, it had the movie theater across the way and restaurants and all that. And there was an entertainment center. What did they do? They knocked it all down. And guess what's there now? Condos. Same exact thing that we're talking about right now was done 5 years ago in downtown Fort Lauderdale. All right, right by the riverfront. So now people dock their boats right there at the condo. They still have, I don't know if they have the restaurant on the water still, but they probably built in some restaurants or something because they had some space there for restaurants. So they already did that downtown. It cost a pretty penny because it's Fort Lauderdale, but still. So just think about it, ladies and gentlemen. What do you think? Let me know. I guess Wilson Koo's not here. So we'll have to talk with him on Friday night. If he comes back, I'm going to send him an email and see if they have that. All right. It's proven to work in LA. Oh, tell me about it. Especially in LA. LA is defined by this. California's been doing this for eons. That's why the cap rate on their retail locations to buy is so low, 2%, 3%, 4.5%. I'm like, really? But yeah, that's why California is different, because anything that's sitting there, because of the space in SoCal, people come in and renovate. Remember down there in Hollywood, Sunset, and all that used to be, well, still is, garbage. And then all of a sudden they were like, hold on, that stuff that's garbage, we're going to knock down this whole block. We're going to put in a mall. Crazy stuff. But that's how they do it. Something has to be there that's garbage, and then somebody's going to come in and change it into treasure. So again, it works in LA, works in Cali all the time. It works in most, like New York, same thing all the time. Riverwalk. Yes, Professor Auntie Val, that's it, Riverwalk. The Americana has a full mall and residential homes. Exactly, Vanessa Comagate. I don't know about that spot, the Americana, but yeah, I love that. It has a full mall and residential homes. See, that's what I'm saying. That's right on time. They're doing that at the Hollywood Bowl as we speak. Vanessa Comagate, tell me it's not so. Are you serious? They're taking the Hollywood Bowl out? No, that's an icon. Don't tell me they're doing that, please. No. Or are they leaving the Hollywood Bowl in and then they're building up by the past the parking lot? Or either, well, actually, you can only go one way, and then maybe as you drive in and go straight through, maybe that's it. Please tell me they're leaving the Hollywood Bowl, because that place is like, it has history. It's sitting on some pretty good land, I will say that. The location is awesome. But man, that'd be bad. Let me know. Really, they can't be taking that down. They got to be leaving the bowl there, right? But that would be a perfect location for freaking, that's like a, geez, putting not homes, but condos there, and then still having the bowl. Man, that'd be very, very interesting. It might drive people crazy when they have the events, but it'd still be pretty cool to have an entertainment venue as their backyard. Wow. Jeez. No, they are not taking it out. They are adding residential and retail. Oh, yes. Beautiful. All right. Hollywood Bowl. I got to give you a shout out. Very well done, LA. Very well done. Oh, yeah, that is correct. She mentioned it. I forgot. The Hollywood Bowl. Yeah, speaking of that, out in the middle of, it's not in the middle of nowhere, but she's got something that she said. Retail. There's no real retail at Hollywood Bowl. It's like sitting there. Something they should have done like eons ago, at least add the retail. They should have added restaurants and all that out there a long time ago. But residential, I love it. I love that idea. And they actually have the space. That's what's trippy about it. They actually have the space. It's crazy. Oh, man, that's pretty awesome. That's great to hear. I'm happy to hear that they're not tearing it down, because and it does have enough room too. I love it. That's beautiful. Somebody made a good ass plan. But I'm just trying to figure out. I thought everybody was leaving California. I thought there were so many homeless people going to be there. Ladies and gentlemen, Californians, you're not going to be immune from price drops. So don't be fooled. There's going to be millions of people moving back as soon as those prices come down 50, 60%, even in LA. Well, I'm not going to get carried away about LA, but I don't know about 50% in LA, but I'm going to go for 30 to 40% for LA. So that means 600,000, 500,000 potentially. Let's go to Pasadena. All right. I'm just saying, Temple City, Pasadena. Let's go get a $500,000, $600,000 pad out there. All right. Just saying. Okay, ladies and gentlemen. Yeah, I know some of you guys are like, hey, wait, he was talking about Europe last time. Now he's back to Cali this time. Yeah, it happens. Got to get around. The labor market has changed, says Victor Marrero. Companies don't need to lease huge buildings anymore. There's also, yes, this is also happening to banks. Exactly. There's banks, empty banks are sitting all over the United States. We had an opening in our team and interviewees were asking for flex schedule. Exactly, Victor Marrero. This is not your father's workforce, grandfather's workforce anymore, ladies and gentlemen. Nobody's accepting the 8-hour day, 5 days a week schedules anymore. What's happening is there's a bunch of kids who are been dealing with this spread of tech companies that got spoiled in the 80s, 90s, 2000s, even now. Lunchrooms at their place of employment, ping pong table, pool table, sleep pods, being able to come in anytime between 6 and 9. You don't have to stay till 8 hours. You can leave after you've been here 6 hours. All that in an environment. So if you have kids 18 to 30 now, so we're talking about kids that grew up in the 1980s, saw their parents doing this funky stuff in Silicon Valley, then it moves up to Washington State, then it moves over to Texas, and then they have tech spots in Florida. All of a sudden you have this large pocket of people that said, hey, wait a minute, my parents didn't have to go to work 8 hours a day, 5 days a week. They had flex schedules. I want flex schedules. Hell, I know friends of mine, they got flex schedules. They got salary. And their salary we want also is not going to be $30,000 a year. We need a higher salary now. You know how much it costs out here to live? So kids are smarter than they used to be. They're not willing to make all these sacrifices going, hey, I'll take $30,000 a year because I'm going to have me and 3 of our friends are going to move into an apartment together because we're all 19, 20, 22, 24. No, these guys are like, no. We want to skip all that now. We need some extra money in our pockets. We want to be able to maintain. It costs money out here. So I understand what they're doing. Exactly. COVID has changed everything. And that also exasperated the situation. More people found out that they could work at home, the same thing they can do at the job. And now more people are saying when they worked at home and there was COVID, again, that number one thing, most people have children under 18 or under 12 or 13, and you're worrying about childcare after school. And you would have to be at work, and you had to bite the bullet. Is that costing $600? Is that costing $1,000? Is that costing $1,500 a month? So now when you're at the COVID and you're working from home, you nix-save the $1,500 a month or $1,000, and you're at home. So you can get up and go to the fridge, get something to eat, cook up something, and comfortable, your own chair, your own living room, your own desk, and you can wake up even 5 minutes or maybe even any time you want to start work. So that changed the whole game right there. And the company still was able to survive, still making the same numbers or a little less due to COVID. But once you come out of COVID, you're still working at home and the company's still making profit. So it's like, wait, why do we need to go to the office? Unless you want to be like Elon Musk. You're not at the office, you're not working. All right? So, and by the way, speaking of employees, I will say one thing. Elon Musk is like, I'm going to call him the evil genius, right? Vanessa Kamagit, I still haven't come up with your genius title yet because that evil genius thing is a good thing. But again, I can't figure one out. But anyhow, he's the evil genius. And he said, you guys got to come back to work. But here's the weirdest part. It's going to come back to bite him sooner or later. I just don't know when later is going to be. What I mean by sooner or later, there's geniuses that work for him. But because of the way he feels about the workforce, no biggie, I'll just lay you off. No biggie, I'll just pay you this. No biggie. That cavalier attitude has superstars that have left Tesla and decided to work with other companies or open up their own, which now means those people are working with competitors and know some of the flaws within the Tesla pipes. And so therefore, it's going to come back to haunt you sooner or later. You can't have top engineers leaving. And he's had a lot. So I'm just saying, he's been able to stay above the fray so far. But one of these days, it's not going to be that way. This is almost like how Ford, GM, and the American car companies were in the early 1970s when that Datsun and Honda and Toyota and all these 4-cylinder or 2-cylinder or whatever cylinder cars were coming. And they were just laughing like, we're bigger, we're badder, we're better, except one problem. Those bigger, badder, and better cars, they weren't really. And then they didn't get as good a gas mileage. And the next thing you know, the game changed when there was an oil crisis. So now everybody's looking for that car that gets 30 miles per gallon. not that car that gets 8 to 10 miles a gallon. So they got left behind, and that's how Toyota, Honda, and Nissan has a share of the American market because of that decision of ignoring certain things. So all I'm saying is that's what you have to do. Elon is an evil genius, but I'm waiting patiently. Exactly. He is an evil genius. Exactly. Yeah, that guy's a character. He's a master marketer. I got to give him that. He's a master manipulator. He'll come out and say, I'm going to buy something jokingly or not jokingly, but the market responds because this man has been in the domain ever since the early 1990s. All right. So he's been out here, taking names, making things happen for the last 30 years. All right. From a ground zero perspective. Trust fund baby, doing excellent stuff. All right. So, all right, ladies and gentlemen, 2 hours, 25 minutes. We got to keep it up. Business ideas with low investment opportunities 2022. All right. Well, I want to show you something else too, because I can't get away from real estate now. I got to show you this, because I'm just going to bring this up. I'll just bring it up because this right here cracked me up. I just had to show you guys this. This here cracks me up. Okay, this is in Poughkeepsie, New York. Some of you may know where this is. Actually, it's kind of in a cool place. If you had a satellite, you would see like lakes, rivers, mountains. It's cool. So, a developer that had 14 waterfront acres in the city, all right, for 20 years, this guy and his company had plans to develop 14 waterfront acres in the city. But now the Common Council is paying him $600,000 to abandon the plans. Now, what can we learn from this? He has 14 waterfront acres. The first part, the developer did great. He got waterfront acres, 14 acres of waterfront. Bingo. He waited 20 years, but they're going to pay him $600,000. Now, what I'm not going to read to you is down below. In fact, here, I'll just put this in the chat room. Down below somewhere, it starts talking about they're going to be paying him another sum in 2023 and 2024 and 2025, not to build, ladies and gentlemen. Can you believe that? Not to build. They want to figure out a new plan for the site. So they're going to keep paying them. Here it is. In fact, I'll show it. The city will have to pay the developer an additional sum in 2023. The developer will still get to use the marina and dock storage at the site, which is awesome, and which brings up story time. All right, so I just want you guys to see that, because that's pretty awesome. And in fact, for all our entrepreneurs out here, investors, I'm going to put up that article also in the chat room. And after this video airs, down below in the description, I'll have links to the articles as well for everybody. But here's the article. The second one I just put in the chat room. That is for the apartments or multifamily properties that they're building on old retail locations. Genius idea. Most cities don't do that. But then again, like Vanessa Kamage said, that's a staple. Because in Southern California and most of California and most cities, you can't just tear down stuff and go from ground zero. That's costly. So if they can use any of the existing buildings and they see buildings sitting somewhere, somebody's going to buy it. It's not going to sit there vacant for long. Or I should put it this way. It's not going to sit there for sale for long. It could be vacant after the sale for a while, but it doesn't sit long. These commercial locations in places like California or New York City, for that matter. As soon as there's a vacancy, somebody's got an idea waiting for that thing to come available. All right. So anyhow, that's part of the story that I'm about to bring up. It's real estate story. So I'm going to do this. I'll do a SSN lifestyle. Why don't I do a little promo? All right. Why not? Let's go with no Playboys. No. Okay, so we'll do this one. All right, people.
But it would have been so awesome. I was going to soar right through here like this. And, oops, I'm sorry. Vin Diesel, excuse me. My bad. Big fan, though, Mr. Diesel. Excuse me. And then I'd be flying, and I'd land right. Where do I land?
Oh, come on.
All right, ladies and gentlemen, just a little mini break there. And that's right. Superstars are in the house. So guess what? We got to get back to superstars are in the house. I can't be sitting around here much longer. We got to make sure we get back this fun in the sun. Make sure things are happening worldwide, right? The original Mr. Worldwide. So I'm going to give you guys a story and then we're going to go. With regards to real estate, speaking of that doc that he left, there was a place, I told you guys about this before. There was a place that was in Clear Lake, California. And that place had a golf course. It had a marina. It had a restaurant at the marina. And it had a clubhouse with an Olympic-sized pool. And not only that, the golf course overlooks the lake. So you're golfing, overlooking the lake. You go eat at the clubhouse. When you eat at the clubhouse, it overlooks the lake. It's awesome, right? Except one little problem. I told this story before. So there was a big boom, all right, in price increases. Except because it has an HOA, they have an architectural committee. The architectural committee decided, and the HOA allowed, get this, the golf course to be built on. They were looking at cha-ching, because home prices, basically living on the golf course, you know that's $1 million house, right? Plus 1.5, 2 million, whatever. Your HOAs are based on your home, your lot, your home, right? So they're thinking in their head, wait a minute, if we clear off like half of the golf course, we'll still have the other half, but then we're going to have all these 30 homes on there. This is going to bring in extra revenue. Yeah, let's do that. Okay, so the repercussions from that was all of a sudden they built 1, 2, 3 homes. All of a sudden, people that lived in that community all of a sudden realized, well, damn, why did we think this was a good idea? We only have half the holes, and they just cut it in half. And now it doesn't even make sense because there were no roads there. It wasn't built for residential development. So now you have people's homes behind other people's houses, so to speak. Not that they're 5 feet apart, but all I'm saying is, 20 feet, 30 feet, whatever. And things look kind of funny. All of a sudden, home prices start going down. All of a sudden, they done built some homes blocking the golf course, and home prices are going down. So their visions of grandeur. Next thing you know, they have lawsuits. They can't pay those lawsuits, of course. Guess what they do? There's a marina on a lake. The HOA go behind everybody back. They sell the frickin' marina and boat launch. Unfrickin' believable. So you know what happens to that HOA and the neighborhood, right? After you have those things. Now you have less amenities, home prices going down. So what do you think starts happening? People start selling, right? And the moral to the story is this. Oh, and yes, I went to the HOA meeting, and yeah, the guy that walked in talking crazy, they are trying to get me out. You know, hey, be quiet. We can't talk about this. I'm like, dudes, this is all bad. This is all wrong. Don't do this. What the F's going on? I wasn't president. I'm not on the board. Couldn't do anything except, you know, you get to get up and talk. So then I said, you guys, you just ruined the neighborhood. And so then they're like, what do you mean? I said, 5 years from now, you won't know me, you won't see me, but this will be on the record. You're going to have Family Dollar and those type of stores. They're going to be right here in this neighborhood because this is going to be a neighborhood that's going to be worthless. And they started laughing. They're like, right. Guess what happened? 5 years later, Family General put in their bid to move into the location right across the street from the HOA office. They sent out letters to all the homeowners and everybody in the HOA, and they started whining. They started going, oh, we got to send in letters. We can't have them. That means our neighborhood isn't that good. I said, exactly. So I just sent them back a letter with LOL. I don't know what to tell you. That's why I had to get out. It's like I told you it was going to happen. You guys playing around like this. So that's the moral of the stories. There's two things you have to do with real estate. You don't want to bring down the value of your real estate when it's unnecessary. That's the story. You don't voluntarily start chopping up your land without a real plan. All right. You may think it's a good idea based on money, but real estate is not always based on money. It's based on location and what people receive from that location. Just because you might think I'm going to build a 10-unit apartment complex right here because, oh, in the middle of the single family homes that property values rose 50%, doesn't mean that that's a good thing to do. All right. So when you're doing real estate investments, you have to think about other things that go on in the neighborhood or potentially can go wrong in the neighborhood. So with all that said, ladies and gentlemen, thank you so much for being here. Please share the videos. Please invite other people to come along. George Maple, it's been wonderful to see you again. And very nice for everyone else to be here as well. And I want to just say, I really appreciate you guys. Thank you so much. And please, again, I'm going to keep saying this, share the videos. I look around the internet and I get a little, I'm getting a little bit more, I don't even want to say I'm getting a little pissed. I'm just getting a little miffed, you know, because I put out videos that told people housing prices are going to go down 3, 4, 5 months ago. I put out videos saying, don't buy a house. I put out videos why you should not buy a house now. Now all of a sudden I see like everybody putting out these videos, don't buy a house now. Except there's one little problem. Everybody who's putting out a video saying what I said months ago, their videos have thousands of views, ladies and gentlemen. So this is why you have to share the videos, because that little time delay that people saw a few hundred of views of my video, those little 4, 5, 6 month time delays where other people didn't see the video, there's these people that were out there buying homes in February, in April, in June. Their home prices are coming down. Las Vegas, $36,000 median price decrease last month. So this is what I'm talking about. This is why you have to share the videos. Because if people would have known what they should have known like 6, 8 months ago, they would have just said, F it. But now all those people that didn't get the message, didn't have an inkling, didn't think about it, they bought homes unnecessarily. They're finding out now why 72% of people who bought homes are dissatisfied in 2021 and earlier this year. So this is why we have to share the video, ladies and gentlemen. All right? Tell people, hey, check this out, send it out, let them know, join the newsletter at the very bottom, let people know, because this information, again, it needs to get out more, because this is going to be a rough ride in the next 12 months. It's going to be a very, very rough ride, and we're going to be able to take advantage of it, but other people aren't going to be able to see it coming. All right? We don't want that, ladies and gentlemen. We want more people in the SSN Nation way. Even though they're not here, we want more people to be cognitive of what's going on. At least I do. Hopefully you're agreeing with me. Yep, that was greed gone wrong. Exactly. Vanessa Comagate, the genius. George Maple, thanks. I will be here. Vanessa Comagate, on Friday, can we talk about your other plans that you have for the other businesses that goes along with the fingernails to go and what you decided to do? That would be awesome to talk about. So I want to get into it. You know, I'm a fan of business opportunities and how to create business out of thin air. It's beautiful. So I just want to see if you'll be here Friday, hopefully, and can talk about it, or money making Monday, either way. But everybody, please join us on Friday night. It's 9:10 p.m. Eastern Standard Time. It's Friday night's live stream. I don't know what the subject matter is going to be, but it's going to probably be about passive income 2022, probably about buying a home in 2023, reasons why you should consider not buying one now, and other new business opportunity at the SSN lifestyle, and more things to talk about regarding that. So please stay tuned. All right. Wilson Koo's in the house. Hold on, Wilson Koo. If you're still here, don't go yet. Hold on. You might have been doing something, but I wanted to know, do they still have ARV lending programs? But this time, what I mean is, I talked about malls. All right. So there's malls sitting around. I can probably go to LootNet and find a mall for $5 million, and people are turning them into multifamily. Can I get a mall, let's say, for $3.5 million that appraises for, let's just say, $5.5 million? Can I get rehab money to turn it into multifamily condos that has the elevators already, escalators already, has retail spots for restaurants already, but I change in everything else into residential, and now we have restaurants, we have other things going on, we have plenty of parking, we don't have to worry about that. We can even have retail locations built in. Can I get myself a $500,000, $750,000, $1 million to start the plan to rehab after we put those multifamily properties in there? And then we get, along the way, as we're building this, rehabbing it, and then as we get the restaurants there and we get them to pay us our, let's say, $2,000 per month, let's say, plus our triple net, we increase the value potentially there. But can we still get that ARV on multifamily? Let me know. Hopefully you're still here, because I want to know, because that would be awesome, right? And by the way, ladies and gentlemen, with or without Wilson Koo, I might be able to do this. How about a new venture? How about we find a mall and change it into multifamily? How about that? That would be doable. I got to make a phone call after this. I like this, especially where I'm at all over the country. There's places that are just sitting there vacant. I think the search is on. I think I found a new adventure. a fun adventure, in fact. So I just want to say, everybody, please like, share, and click the bell so you get the latest updates. And I know it's hard out here, but that's why we have to bring different ideas, expand our minds, because you never know. You know how many times you're going to fail to become a millionaire, but how many times are you not going to fail, right? You don't fail every time, ladies and gentlemen. And like Mark Cuban says, all you need is one big win. There you go. Okay, so we're doing 5 big wins. SSN lifestyle, in my opinion. Then we're going to be doing passive income opportunities, passive business opportunities, 2 big wins. 3 big wins? Come on. I think we can pull this off. Well, if you can't pull it off, I think I can pull it off, is what I'm saying. So if, again, if Wilson Koo is here, I'm going to send him an email. I want to know if I can get some ARV. In fact, I think I know somebody that I can get ARVs from. Anyhow, this is going to be very interesting because I love it. I like that idea. I never really thought about it from a different perspective because, like Vanessa Comagate says, it happens in Cali all the time. So you don't even think about it because you're not thinking, I'm going to go buy this building, change it into multifamily. You're thinking, I'm going to buy this building and keep it as a retail location, and that's high risk. So now that you have an actual bona fide way to get money in the door, now you're thinking, hold on a second. I build some apartments, charge reasonable rent, and then have restaurants and shops downstairs. Bingo. And it's already existing. The bones are there. The restaurants are there. The space is there. Man, where do I find these? They're all over the place. So let's go searching, ladies and gentlemen. All right, I'm going to go searching. You guys can chill. But anyhow, I don't know if that's going to be a ring of fire, the SSN lifestyle, but you never know. I might show some love, right? I think I can pull this off. I'm going to go searching. We'll see. I'll know more on Friday, and I'll let you guys know what I found, all right? And then I'm going to let you know how we're going to structure this. So Wilson Koo, you might have a way to do some funding. Let me know. If not, either way, we're going to still try and make it happen. With or without Mr. Koo, man, if he can't do it, we have other people that can. So with all that said, ladies and gentlemen, stay tuned. Don't miss Friday night. It's going to be off the charts. All right? Let's see. Hold on. Somebody made a comment before I get ready to go. Wilson Koo, here we are. Ladies and gentlemen, they do have. Your LTV is not as high as before. Okay. Wilson Koo's in the house, ladies and gentlemen. Okay. What's the LTV? So I'm going to give you an example. I'll give you an example. I'm going to move into realistic territory. Let's say $10 million is the appraised value of the mall as it sits. Let's say I can buy the mall from that person for $5 million. That's 50% LTV, right? But I need from you, how much can I get? Can I get 2 million? 3 million? Because after I change this to multifamily, after I change it and get however many restaurants are there, let's say there's 4, I can put in 4 restaurants. I can put in a couple of stores, probably mini mart, of course. We need a mini mart there, right? Come downstairs, go to the mini mart. Yeah, got to have that. 7-Eleven maybe. Well, that would be awesome. But all I'm saying is we need a store. So now we get those under contract. Now we go see the guys. 10 million it won't be worth. It'll probably be worth at least another couple mil. So let's say 12 mil. So 7 million after it's done is worth 12 million. Is that doable? Are we in LTV range? That's what, 60? It's almost 60. Almost. It's a little under 60, right? 57, 58%. Is that what it is? I will look into this and email you. You can do that in various ways. Yes, I know. I'm going with the simplest explanation right now, but I think it's doable. But the point is 7.5 million. Let's go 7 million after rehab and putting apartments in. Now we got it worth 12 mil because actually we added revenues to it, and we still have a bunch of other opportunities because Vanessa Comagate, we're going to have that fingernails to go situation. We're going to have nail salons in there too, right? We got to have a spa. We have people living there. I'm just saying. All right. This opens the door. Instant people are in the house. Just what you would do in New York. I mean, nothing different. It's just that in smaller cities, they normally won't do this setup. So I believe that there's a way to make it happen. All right, ladies and gentlemen, let me know. Think about it let it marinate for the next 24, 48 hours until the Friday night live stream. Let me know what we think. We're going to come up with the game plan, and I'm going to let you know how we're going to do this. You guys might see something else from the ground up. I'm having a hard time. I like doing so much stuff. SSN Lifestyle is still a baby, hasn't even grown up yet. There's so much more to do. I need an intern for SSN Lifestyle that knows how to post and do some sort of promotional videos and things like that on social media because I'm not going to be able to handle that. So I need somebody that can do that. So I need an intern for a few months. Then you can get paid after that. All right. Then we'll change you into a different position. We'll see how you can do if you're up to par on this. So if anybody knows an intern that can do social media marketing, send them my way. Support at SSN Lifestyle. That's right. Change up. Or support at stopstrugglingnow.com or support at SSN Lifestyle. I need an intern for SSN Lifestyle. All right. So we're going to go that route. So I'll be posting that up. And yes, I'll be waiting on your email, Wilson Koo. All right, ladies and gentlemen. So I'm glad he got that tonight because that's pretty awesome. You guys might enjoy this ride. Again, SSN Lifestyle, some people are already enjoying the ride. Now more might enjoy another ride that we're going to have that I can I'll try and share something. I don't know how I would be able to split it in because I'm going to have partners if I do this. If I do this multifamily mall thing, I'll have partners in this deal, so I won't be able to share too much. But you never know. And with all that said, ladies and gentlemen, see you on Friday night, 9:10 p.m. Eastern Standard Time for the SSN Nation Friday night live stream with more awesome information. And don't sleep on Cruise on Land, ladies and gentlemen. That's a pre-construction property. Check out the video on that. No credit check, no qualifying to start. Ultimately, 34 months from now, you will have to get the financing for that. But in the meantime, you can put your skin in the game and put down 40%, which is a good number. So you'll have a 60% LTV. Over time, you put up 10% first, and then over the next 34 months, you're going to be putting down an additional, is it 30% or 20%? I forget. So you might either be putting down just 20% more. So anyhow, I think it's 30% more. So it's 40% after it's all said and done, skin in the game. You'll owe 60% LTV. But if the property value increased, your 60% LTV will drop. It could get as low as 50, 40, 30% LTV. That would be pretty awesome. So all I'm saying is, here we go. You could get about 3M, and then we can leverage after the fix and get 60%. Okay, I know he's right. Exactly right. Exactly. So if we got it at 60% LTV, 12, 6, 8. Actually, it's going to be worth more than 12 mil because we're going to actually have the numbers are going to be different with the multifamily. We're going to have more people per square foot in the same space. So we're going to be able to get, the valuation is going to be higher, quite frankly. So we need, if we can get, if it went 8 million and we can get in, let me see, if you can get in 1.2 mil revenue generations, that gets us our number. So that's what you would have to get to 12 mil, 13 mil or higher. We can get our numbers there. So that's not even out of reach. To get 1.2 out of X amount of units, we just divide that. That's how many units we need. Then we have people renting out spots because it's already a mall, already there. And so now the residential people can now go there. Yeah, it can work. I think we can get a higher valuation, quite frankly. I like it. I like it. This is the big boy stuff now, ladies and gentlemen. Somebody sent me something, an email one time, I think. No, it was a comment on YouTube here, and they said, "Hey, can you talk about some other high-end stuff?" Well, we're about to talk about some high-end stuff. We're going hunting, ladies and gentlemen. That's right. We're going hunting. So we'll find out. But I like to hear that. I love to hear that, Victor. I mean, I keep saying Victor tonight. Love to hear that, Wilson Koo. 60% after. I love it, man. I think it can be structured, quite frankly, relatively simple. So I'm pretty sure I can make it happen either way. But now that you think that even under your program we can make it happen, I have other things that I can tap that I think can happen as well. So that's what's going to be very, very interesting here. All right. So it's going to be interesting. So I love it. All right, ladies and gentlemen, are you ready for another ride? SSN Lifestyle is just a baby. It's about to begin. Sit back, hold on tight, pay attention, get in. It would be great if you become a member, but it would be great if you're not a member and become a referral affiliate and refer people and earn commission and earn some of that affiliate money. If you're a member, you automatically, when you refer people, also receive commission. But as a member, you get to receive other benefits. And now we're going to get into big boy toys. All right. Getting property when there's a recession. How about that? That's the time to get in, ladies and gentlemen, if you can. All right. Let's go hunting. And with all that said, keep your head up. Keep moving. And I'm out.